Check, mic check. HRS, mic check. Oh, thank you.
red means. Yeah.
Mic check, 1, 2, 3. Mic check, 1, 2, 3. Thank you.
Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. The hearing is titled AI Innovation Explored, Insights into AI Applications in Financial Services and Housing. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And I'll now recognize myself for 4 minutes for an opening statement. I want to thank our witnesses for being here today. This hearing is an historic milestone for the committee. Today, we will examine use cases of artificial intelligence in financial services and housing. At its best, artificial intelligence holds the promise to enhance, not replace, human progress. Unfortunately, its novelty and perceived risks have delayed adoption in many sectors of our economy. In January, Ranking Member Waters and I formed a bipartisan working group to explore the use cases of AI within our committee's jurisdiction. I appreciate the ranking member and her staff for their participation and efforts in this endeavor. I also want to thank working group co-leads, Congressman Hill, the vice chair of the full committee, and Congressman Lynch for their leadership. This working group builds on the success of the Task Force on Artificial Intelligence in previous Congresses. The bipartisan working group embarked on a months-long fact-finding mission, including 6 roundtables and a trip to MIT, which I was pleased to be a part of, and countless other meetings. Members engage with regulators, technologists, market participants, and consumer advocates to gain a deeper understanding of how AI is currently impacting our financial system, as well as how it may do so in the future. This was a comprehensive process, which is outlined in the bipartisan report released last week. This collaborative approach will benefit Congress as we work to keep pace with this evolving technology. To be sure, AI is not new in the financial services industry. Financial firms have used algorithms for decades, whether it's for analyzing large data sets or for trading. However, new developments in generative AI, or Gen AI, have excited the imaginations of many. The financial services industry, one of the most highly regulated in America, is a clear entry point as policymakers attempt to tackle the thorny questions AI presents. We should be leery of rushing legislation. It's far better we get this right rather than to be first. In other words, policymakers shouldn't measure twice and cut once. We want to get this right. American financial regulations are technology neutral and should remain that way. To be clear, the use of Gen AI does not absolve a firm from complying with existing consumer protection laws. At the same time, our regulators must ensure that they are equipped to take on this new technological frontier. This committee should examine whether current regulation needs to be clarified and carefully considered if targeted legislation to close regulatory gaps may be needed. Today, we'll discuss the importance of quality data, credit access, model creation, model risk management, cybersecurity, human touch points, and a whole lot more. This hearing will advance the conversation on the use of AI in financial services and cement this committee's leadership on artificial intelligence policy. I'll close with this. Gen AI is here. We cannot put it back in the box. It will become more widely adopted to the point that it is embedded in our everyday lives. We cannot allow the fear of the unknown to thwart the United States' role as a hub for technological innovation. We should embrace it, we should be at the forefront of it, and we should ensure that all technologists want to be a part of the American ecosystem, our rule of law, and our regulatory structures. Far greater than the risks associated with from AI itself are the risks of allowing foreign competitors and adversaries to lead the development, adoption, in terms of use. The United States should be at the forefront and remain at the forefront as we are right now. I yield back. I'll now recognize the ranking member of the full committee, the gentlewoman from California, Ms. Waters, for 4 minutes.
Thank you, Mr. Chairman. Good morning. I'd like to start by applauding and thanking Chair McHenry for working with me to establish the committee's bipartisan working group on artificial intelligence. After months of roundtables moderated by Representatives Hill and Lynch with regulators and experts, we released a report detailing the implications of AI, including newer generative AI models on financial services and housing. I'm pleased that this report lays out several recommendations for the committee to better protect consumers and our markets as AI is increasingly adopted. For example, the report makes clear that this committee must lead the House in overseeing AI and that we must ensure our regulators enforce existing laws, including anti-discrimination laws and policies, so that any benefits of AI are broadly shared. Today's bipartisan hearing, the working group, and the report successfully build off the work this committee started under my leadership as chair when I stood up in Congress, first ever task force on AI in 2019, chaired by Mr. Foster. This task force held more than a dozen hearings exploring the potential risk and benefits of AI. This task force is part of a long list of efforts by Democrats to oversee new technologies and to ensure they are developed in the best interests of consumers. As companies forge ahead with AI, it's more important than ever that this committee and Congress not only continue this kind of oversight, but prioritize its review of AI and diversity, equity, and inclusion. As we know, AI is built by humans and relies on data that may reflect bias and systemic inequities or perpetuate discrimination. For instance, people of color looking to secure mortgage loans have been denied or overcharged significantly as a result of discriminatory algorithms. However, responsibly crafted AI may help expand financial access for consumers, aspiring homeowners, renters, and businesses while removing barriers to economic mobility. For this reason, I'm pleased that this hearing is also considering my draft legislation, which would better inform consumers when products and services incorporate AI. The data is used to train AI-based decisions and provide regulators with the origin of the data used by AI. The Treasury issued this recommendation in its report entitled Managing AI-Specific Cybersecurity Risk. And I quote, the financial sector would benefit from a standardized description similar to the food nutrition label for vendor-provided AI systems and data providers, end quote. I'm also pleased that we are considering Representative Peterson's legislation, Preventing Deep Fake Scams Act. In this hearing, which sets up a task force to examine how banks and credit unions can protect themselves and their customers and members from fraud associated with AI. Through efforts like these, we can build more transparent and equitable systems as well as trust and safety in an increasing AI-driven world. So I look forward to today's discussion, and I yield back.
Gentlelady yields back. The chair recognizes the chairman of the Subcommittee on Digital Assets, Financial Technology, and Inclusion, the gentleman from Arkansas, Mr. Hill, who's co-lead of the task force on AI as well. He'll be recognized for 1 minute.
Thanks, Mr. Chairman. I'm proud to be the co-chair with my good friend, Mr. Lynch of Massachusetts, of this working group on artificial intelligence. I see Mr. Lynch got the wardrobe memo today. Good. Dressing very sharp today. Tackling this complex issue in a bipartisan manner is not easy, but it's critically important. Leading up to this hearing, as the chairman said, we had 6 roundtable discussions and an outstanding deliberative visit to the academic experts at MIT. We also have a working group that Dr. Foster and I serve on behalf of Speaker Johnson and Minority Leader Jeffries at the House-wide level, demonstrating the importance this House has in making sure that we get AI right. And we need to be innovative and we need to be leaders in the world, but we need to be instead of being reactionary in our policy making, Congress should take a measured approach to AI that seeks first to understand this rapidly evolving technology while exploring in potential gaps in the law or supervision. We'll begin that work today. Yield back.
Gentleman yields back. The chair recognizes the ranking member of the Subcommittee on Digital Assets, Financial Technology, and Inclusion, the gentleman from Massachusetts, Mr. Lynch, co-chair of the AI working group, for 1 minute.
Thank you, Mr. Chairman, and to the ranking member. Thank you for holding this important hearing. I was honored, as the gentleman from Arkansas mentioned, to co-lead the working group on artificial intelligence alongside my friend, Mr. Hill. In June, we led the working group on a visit to MIT. Through this work, we had thoughtful conversations with industry leaders, academics, and technologists to learn about the policy implications of AI. The explosion of AI adoption across industries has raised serious questions about implications for financial access, employment, data privacy, and intellectual property. And while AI has the potential to expand access to financial products, we need to ensure AI models are explainable, transparent, and do not lead to bias. Lastly, it is critical that the U.S. remain a leader in AI safety and security, and I look forward to continued collaboration with my colleagues as we further explore policy actions that are needed. I yield back.
Gentleman yields back. I want to thank the co-chairs of the working group for their leadership. The day we spent at MIT was fascinating, deeply informative, and I would commend that to other committee members who were not able to attend that day. And I appreciate Mr. Hill, Mr. Lynch, for your leadership. And also, you know, Mr. Lynch wanted to show off his native Boston. Neither French nor I, in particular, came away with an accent. So thank you for that.
Mr. Chairman, did you mention Sylvia Garcia was there?
Oh, yes, yes, and Mr. Garcia was there, but I was just thanking them for that. Let me recognize the testimony of our distinguished panel. We've had a large panel today, so I'm going to introduce everybody at once, then we'll go one by one, and you'll have 5 minutes for an oral presentation of your testimony. We recognize today Mr. Vijay Krunamurthy, Chief Technology Officer at Scale AI, Dr. Andrea Linda, Senior Director, Personalization AI at Zillow, Ms. Elizabeth Osborne, the Chief Operations Officer, the Great Lakes Credit Union, Mr. Frederick Reynolds, Deputy General Counsel for Regulation and Legal and Chief Compliance Officer at FIS Global, Ms. Linda Rice, President and CEO of the National Fair Housing Alliance, Mr. John Zecca, Executive Vice President and Global Chief Legal, Risk, and Regulatory Officer at NASDAQ. Thank you for taking time to be here today. Each of you will be recognized for 5 minutes for an oral presentation of your testimony, and without objection, your written testimony will be made a part of the record. I will note that we have House floor votes that are imminent, and we'll consult with the ranking member on the appropriate time for us to break, but we're going to try to get through as much as we possibly can so we can get to member questions. So with that, Mr. Krunamurthy.
Chairman McHenry, Ranking Member Waters, and members of the House Financial Services Committee, thank you for the opportunity to be here today. It's an honor to discuss the exciting role that AI is playing in the financial services and housing sectors, industry trends in adopting AI, and recommendations for the safe deployment of AI. My name is Vijay Krunamurthy, and I'm the Field Chief Technology Officer at Scale AI. Scale is helping the world's leading technology companies build, deploy, and evaluate artificial intelligence. Since 2016, Scale's mission has been to build the data foundry for AI. Every day, we work with the leading automotive companies building high-quality computer vision data sets, nearly every generative AI company to ensure that their large language models, or LLMs, have the highest quality data, the world's most prominent companies applying artificial intelligence, and the US government to bring the best-in-class commercial AI technology to the Department of Defense and other agencies. Underpinning all of this is our work on AI test and evaluation to ensure that our customers' AI is safe to deploy. Our years of work on the front lines of nearly every major AI innovation gives us a unique view in how to build and deploy high-quality and safe AI systems. AI has the potential to deliver tremendous benefits for society, but this can only happen if it is deployed safely and responsibly. The financial services industry has long recognized the value of AI and has began to adopt the technology back in 1982, with the housing sector following shortly thereafter. Due to the long history of its use, federal and state regulators have also incorporated many aspects of AI into existing regulations for those sectors. In November 2022, the AI world changed with the release of ChatGPT, and today nearly every sector of our economy is actively looking to harness the power of generative AI. Based on our role in the AI ecosystem, I want to highlight 3 important trends that we are seeing to most successfully deploy AI in the financial services and housing sectors. Firstly, foundational AI elements are critical. At a high level, AI is only as good as the data that it is trained on. High-quality data produces high-quality outputs. As the leading companies of the world deploy AI systems, they should ensure that their data strategies and budgets are in place so that they can turn raw data into AI-ready data, which means that it is curated, transformed, and annotated so that AI systems can leverage it. Secondly, fine-tuned proprietary data is a game changer. The leading commercial models today can perform at a master's degree or a PhD level. However, companies need not only master's and PhD level capabilities, but also industry-specific, expert-level capabilities that only come from years of institutional knowledge and data within the company. This is where proprietary data comes in. Training models with a company's data gives AI the institutional knowledge that allows enterprise to derive the most value from it. For example, JP Morgan reportedly has roughly 150 petabytes of proprietary data, or 150 times the entirety of ChatGPT's initial training data. Harnessing the power of that data would create incredible insights for this bank to better serve its customers because this data is directly relevant. If companies want to harness the power of AI for their own applications, they must use the best-in-class commercial models and leverage their data to build the highest quality AI systems. Lastly, deploying AI must be done safely and responsibly. Test and evaluation is the best way to ensure that AI is safe to deploy because it entails robust testing of the AI system to better understand the potential vulnerabilities and comprehensive evaluations to produce a holistic picture of the AI system as a whole. For this reason, the US government has long recognized the importance of developing the standards, frameworks, and methodologies that underpin test and evaluation. As companies leverage AI systems, they need to consistently test and monitor them to ensure that they remain safe to deploy. Given the amount of time that both sectors have used AI, new regulations may not be necessary. However, a thorough and comprehensive gap analysis should be conducted to confirm whether or not these regulations apply. If gaps exist, we must fill them. We believe that should be done with risk-based, sector-specific regulations. But AI safety metrics are still needed. In practice, this may be as simple as regulators stating that AI is held to the same standards as humans, but it must be government's role to establish these metrics. Lastly, government and industry should collaborate to ensure that the workforce of the future is ready for this technology. If we do not train our workforce, we will not reach the limitless potential of AI. AI is the most promising technological innovation of our time, but it will only reach its full potential if it's deployed in a safe, responsible, and thoughtful manner. This is Scale's mission. Thank you again for the opportunity to be here today, and I look forward to your questions.
Thank you for your testimony. We'll now recognize Dr. Linda for 5 minutes.
Thank you, Chair McHenry, Ranking Member Waters, Congressman Hill, Congressman Lynch, and members of the committee for holding this hearing on AI and for your work over the past month to examine issues related to AI. I also want to acknowledge and thank the other witnesses, including Lisa Rice, for her leadership and dedication to housing fairness and equity. My name is Ondřej Linda, and I am Zillow's Senior Director of AI. My expertise is in developing and deploying large-scale AI systems and leading AI organizations to create new experiences to empower home buyers, renters, and sellers. For the past several years, I have also been deeply involved in spearheading responsible AI practices at Zillow. Zillow is the leading real estate marketplace, and with over 200 million monthly unique visitors comes a tremendous responsibility to lead the way in innovating responsible AI technology. Today, I'd like to discuss how Zillow uses AI to help consumers on their housing journey, how we work to identify, reduce, and mitigate bias and discrimination, and the promise we see when it comes to AI's ability to address housing equity and access in this country. Home searching and buying processes are complicated and confusing, and often fraught with emotions. In fact, according to 2022 Zillow Consumer Survey, over half of home buyers reported they actually cried during the process. Since the study was conducted, affordability and supply challenges have led to home buyer sentiment sitting at an all-time low. Zillow is focused on helping consumers navigate this daunting market and home buying process by empowering them with information. In fact, Zillow's first product, the Zestimate, was an AI-driven valuation model that informs people for free of their home's potential estimated worth. Before this estimate, home buyers and sellers had virtually no public access to pricing estimates. Traditional online home listings, which show only two-dimensional images, haven't evolved for decades, and we have changed that. Our AI powers 3D home tours and immersive floor plans, increasing transparency and opening up homes to people who cannot tour in person. And thanks to AI, consumers on Zillow can get personalized recommendation that expands their search to a broader set of housing inventory. AI tools could also play a role in decreasing appraisal bias and unlocking wealth for people of color by allowing more objective and efficient approaches to understanding home valuation, including in rural areas. And we are examining how AI can help to modernize existing industry frameworks with the aim of decreasing costs, streamlining paperwork, and reducing legacy access burdens in the housing market. At Zillow, we believe that AI can be a great tool for to help more people get home and reduce bias and discrimination, but only if used responsibly. I'm proud to be part of an organization that has adopted and publicly shared ethical AI principles to guide our work and elevate industry standards: fairness, safety, accountability, transparency, and inclusiveness. To deliver on these promises, we recently open sourced our fair housing classifier. That means that civil rights groups, tech companies, and others in the real estate industry can adopt it for free and collaborate with us to help improve it. At Zillow, we are constantly thinking about the next innovation and how we can have a positive impact on people's lives. As we speak, Zillow's entire technology and product organization is at our long-standing Hack Week. They are evaluating and experimenting with new technologies, including AI, to unlock new opportunities. And just down the street at FHFA, Zillow is participating in a tech sprint on generative AI in housing finance. We truly believe that these public-private partnership and cross-sector collaboration would be key in harnessing the power of AI to make housing more accessible to all. Again, I wanted to thank the committee for holding this hearing and your focus on this topic. We look forward to working with all elected officials to identify ways to create pathway to AI innovation in housing that help inform, protect, and empower customers. I look forward to your questions.
Thank you for your testimony. After this testimony of Ms. Osborne, we will recess the committee for floor votes. For the panel, that should take till about 11:15 until we get back. So with that, I'll recognize Ms. Osborne for 5 minutes.
Thank you. Good morning, Chairman McHenry, Ranking Member Waters, and members of the committee. I'm Elizabeth Osborne, the Chief Operations Officer for Great Lakes Credit Union. We're founded in 1938 and are a low-income designated HUD-certified financial cooperative in the Chicagoland market and surrounding areas. We serve over 90,000 members in that market. At the heart of our mission is the credit union philosophy of people helping people. At GLCU, that includes state-of-the-art technology and a range of financial solutions in place for one goal, to enable our members to live life on their terms. Credit unions like mine are committed to using AI safely, securely, and with the goal of helping members meet their financial needs. AI enables credit unions to compete more efficiently with the larger banks and non-bank companies in the financial services arena. AI has not altered credit unions' historical role as relationship lenders committed to maintaining a close bond with the communities they serve. AI usage at credit unions generally falls into 3 categories: underwriting support, combating fraud, and customer service, which is the area we have focused on at GLCU. As part of our commitment to innovation to our members, GLCU entered into a partnership with Interface AI and launched Olive, our virtual conversational AI assistant, with the goal to provide our members with an enhanced, easy-to-use, and voice-enabled virtual assistant. Olive is able to handle a wide range of member inquiries and requests, such as account balance, transaction history, transfers between accounts, and more. Olive is available 24/7 through multiple channels, including phone and chat. Since the introduction of Olive, GLCU has realized remarkable results in terms of member satisfaction, member call center performance, and employee engagement. For example, Olive consistently handles over 60% of total inbound calls during business hours and over 75% of all calls after business hours. This compared to less than 25% handling rate with our previous telephone banking solution, which did not include AI technology. Olive has increased the number of calls fully serviced by the virtual assistant by over 200% since launch. Olive provides recommended responses and advice to call center employees when a member requires special assistance or prefers to speak with an employee. An inherent benefit of Olive is that it has enabled the credit union to elevate the job description and level for call center agents as their role moved from providing transactional support for members to providing more consultative advisory support. This shift has resulted in a higher pay grade for staff and a better career path for our call center employees. GLCU management is continuously working to improve and expand Olive's capabilities and features. One of our main goals this year is to upgrade Olive to speak Spanish, to better serve our Spanish-speaking members, which represent a large percentage of the GLCU membership base. In addition, GLCU is also exploring additional methods to leverage AI to improve operations and services. One tool is Microsoft Power Automate, which enables the credit union to automate repetitive and manual tasks. By using Power Automate, staff can save time and resources, reduce errors and delays, and increase productivity and accuracy. As policymakers grapple to legislate and regulate in this emerging environment, it is important to recognize many existing laws are technology agnostic and still apply. As with other technologies, consumer financial protections and anti-discrimination rules continue to have broad applicability, whether the decision-making is human or AI. Existing regulation requires credit unions to adopt robust practices to ensure that the use of new technology does not jeopardize safety or the rights of individual members. It is encouraging to see recognition of the broad applicability of existing fair lending and consumer financial protection laws in the bipartisan working group report. In conclusion, AI is an important tool for credit unions, helps us to enhance service to our members, and provide services that economies of scale may not otherwise allow us to do. At GLCU, Olive is a strategic partner that helps us fulfill the underlying mission of a credit union. Our use of Olive is a prime example of how credit unions can effectively deploy the use of AI to improve the lives of our members. I thank you for this opportunity to appear here today and welcome any questions you may have.
Thank you for your testimony. Pursuant to the chair's previous announcement, the committee stands in recess. I encourage members to return immediately after votes. With that, we recess. Committee will come to order. We will continue with the testimony from our panel. Next up in the order is Mr. Reynolds. You're now recognized for 5 minutes. I feel like it's icing the kicker for like the final three. First three, you got off easy. Sorry. So, Mr. Reynolds, you're recognized for 5 minutes.
Thank you, Chairman McHenry, Ranking Member Waters, Congressman Hill, and Congressman Lynch, and members of the committee. My name is Frederick Reynolds, and I'm the Deputy General Counsel and Chief Compliance Officer for FIS. During my time as a federal prosecutor, as the Deputy Director for FinCEN, and now in the private sector, I've had the opportunity to see firsthand how new and emerging technologies impacted the financial sector and national security, the two of which are inextricably linked. Artificial intelligence, if responsibly utilized and regulated, can have a significant and positive impact in modernizing products and services, increasing financial access and inclusion, and enhancing ethical standards and customer outcomes. However, it also presents, in particular generative AI, substantial risks. FIS is a financial technology company that delivers technology solutions to major financial institutions around the globe. Our operations power the global economy, managing money at rest, money in motion, and money at work. Given the vital role that we play in financial services, we are acutely conscious of our significant responsibility to ensure that our products and services are both safe and leading edge. One area that FIS is currently focused on is the impact of technologies like GenAI and Web3 on fraud prevention, identity verification, and existing customer due diligence procedures. As these technologies become more widely adopted, our traditional means of assessing trust, i.e. identity, are less effective through anonymous or pseudo-anonymous online identities and deepfakes. This, coupled with an increased ability to avoid the formal financial system, puts the overall CDD and AML programs at risk. Recognizing that the current AML controls, which require full knowledge of a user's legal identity as a proxy for trust, may be at risk of becoming ineffective, it is imperative that the industry look to next-generation CDD identity controls that take advantage of GenAI and Web3, but also protect against their misuse. This requires us to rethink how to define identity and create solutions, such as digital identity or zero-knowledge identity proofs, that focus on behavior and trust within the financial ecosystem rather than easily fake data elements. As Chief Compliance Officer, I have a responsibility to safeguard FIS and its customers by ensuring adherence to laws, regulations, and ethical standards. This commitment extends to FIS's advancements with AI. Our priority is clear: to deliver products that our clients can trust, avoiding high-risk and uncertain solutions that do not meet legal, regulatory, and ethical standards. FIS is continuously exploring ways to enhance what we can offer to our clients, and we deeply understand the unique challenges that our clients, both large and small, face and the opportunities that AI can bring to these businesses. We are embracing innovation, but taking measured steps toward it to deliver real value to those we serve, and we pride ourselves on robust risk management programs to ensure that we are effectively managing risk while at the same time allowing us to be agile and innovate. As we further integrate AI and GenAI into our operations, our approach remains grounded in 6 core principles: transparency, explainability and auditability, accuracy and accountability, privacy and data protection, security, all of which must be rooted in fairness and human values. We believe the current regulatory regime governing financial services are robust enough to support the responsible adoption of AI technologies. Consumer protection, anti-discrimination, and financial market regulations provide a solid foundation for using AI in financial services. These regulations ensure that AI technologies are used ethically and responsibly. Still, considering we are so early in the innovation curve of GenAI, it is imperative that we continually reassess regulations to ensure that they allow for innovation in a risk-thoughtful manner. The one area, however, we do believe that congressional action is critical is updating our current CIP and CDD regime and the development of a digital identity system. The AI regulatory landscape is more broadly not as stable and not as defined as it could be. Globally, the regulatory environment for AI is uncertain, with each country adopting a unique approach based on varying risk considerations. While consistent global standards are ideal, it is imperative to our ability to innovate that we have at a minimum a consistent federal approach to AI regulation. Fragmented regulation across states will introduce complexity, burden innovation, and impede the positive impact that can come with AI technology adoption. We urge policymakers to adopt a cohesive regulatory framework that not only promotes innovation, but also ensures robust compliance with regulatory requirements. Thank you once again for having myself and FIS at this hearing, and look forward to further discussions and questions. Thank you.
Thank you. Ms. Rice, you're now recognized for 5 minutes.
Chairman McHenry, Ranking Member Waters, and distinguished members of the House Financial Services Committee, thank you for the opportunity to share information about NAFA's work regarding the application of artificial intelligence in the housing and financial services sectors. NAFA is the nation's only national civil rights agency solely dedicated to eliminating all forms of discrimination. As the trade association for more than 170 fair housing agencies located throughout the country, NAFA works to support survivors of discrimination and build resilient, inclusive, well-resourced communities where everyone can thrive. AI holds great promise for improving systems, democratizing housing and credit opportunities, lowering costs, and increasing productivity. It also holds great dangers for perpetuating bias, spreading misinformation, and generating other harms. For NAFA, AI and technology are the new civil and human rights frontier. How we develop and use these powerful systems will dictate whether people will have fair access to critical opportunities in a manner that is safe, or whether people will continue to be presented with prohibitive systems that can generate inaccurate decisions that consumers do not understand. Multiple enforcement actions, including those brought by NAFA, as well as research conducted by many stakeholders, show there are multiple systems in use today that produce harmful impacts. Credit scoring and insurance scoring systems that rely on outdated, unrepresentative, or inaccurate data result in consumers being denied for the credit and other services they need to purchase a home, obtain insurance, or secure rental housing. Bias systems also result in consumers paying higher costs unnecessarily. For example, one study revealed that Black and Latino borrowers are being overcharged by risk-based pricing systems to the tune of $765 million per year. The Casualty Actuarial Society acknowledged that algorithmic bias can manifest in systems used in the insurance sector, including underwriting, pricing, and claims models. Tenant screening selection and dynamic pricing systems can also perpetuate bias and generate decisions that are inexplicable. Automated valuation models, or AVMs, can also generate bias. With support from Zillow, NAFA hosted a hackathon just last year designed to explore these challenges. The teams participating in our hackathon identified several structural barriers. In fact, because of these systemic flaws, in some cases, AVMs had only a 15% rate of accuracy in predominantly Black neighborhoods. While AI can pose perils that we must not ignore, it can also hold great benefits. We can use AI to increase data accuracy, provide guidance to consumers on how to appropriately assess risk and credit, or enable lenders to use rental housing and cash flow data to underwrite consumers. We can also use AI to increase fairness. Just a few months ago, NAFA and Fairplay AI released important research explaining how distribution matching, a technique that allows multifaceted optimization, can increase fairness in mortgage loan originations for Black and Latino applicants by up to 15%, and reduce pricing disparities for their same groups by up to 20% with no trade-off in model accuracy. To ensure AI will be used to benefit society, NAFA urges Congress to pass comprehensive legislation that includes the following: shoring up civil and human rights protections, providing full internet access for all communities, providing the public access to data, particularly for important research, ensuring consumers have agency over their own data, supporting the use of privacy-enhancing technologies, assuring systems are safe, accurate, and effective, requiring entities to provide accurate notices to consumers, providing funding to promote important research, ensuring federal employees are well-trained and agencies have sufficient resources to provide oversight and enforce the nation's laws, and providing for human alternatives. The recent global IT outage that halted airline services and crippled banking institutions provides a clear example why there must be a human or manual alternative. Thank you so much for the opportunity to testify, and I look forward to answering your questions.
Thank you, Ms. Rice. Mr. Zecca, 5 minutes.
Thank you, Chairman McHenry and Ranking Member Waters and all the members of the committee. On behalf of NASDAQ, I appreciate the opportunity to testify on NASDAQ's use and governance of artificial intelligence technology. From our founding 50 years ago, when we became the world's first electronic exchange, NASDAQ has continued our role as a technology leader in the capital markets. Our technology powers more than 130 markets around the world. We help the banking community fight financial crime. At NASDAQ, our vision is to be the trusted fabric of the world's financial system, and our purpose is to advance economic progress for all. Our solutions enhance liquidity by powering robust markets, ensure transparency by leveraging data and analytics to fuel decision-making by corporates and investors, and protect integrity by managing risks, surveilling markets, enhancing compliance, and fighting crime. Right now, AI applications are enabling a fairer and more efficient and resilient financial system. Today, I wanted to share a few examples of how we are harnessing AI's potential at NASDAQ. Our anti-financial crime business is leveraging AI to more effectively than ever before fight criminal organizations engaged in smuggling, drugs, terrorism, and money laundering. An estimated $3.1 trillion in illicit funds flowed through the world's financial system in 2023. And last year alone, losses from fraud totaled $485 billion globally. To address this massive problem, our cloud-based platform is used by thousands of financial institutions of all asset sizes to dramatically improve the effectiveness of their financial crime risk management programs. After all, there is a money trail behind every act of terrorism or human trafficking. Financial crimes are not victimless crimes. We must be more innovative than the criminals who are also using AI. To further protect the integrity of our markets, in our market surveillance business, we use machine learning to detect insider trading, market manipulation, and fraud. AI will also enhance effectiveness as we analyze billions of transactions and events every day. Meanwhile, innovation continues as we recently introduced Dynamic Mello, the first exchange AI-powered order type, and we are also deploying AI in our market data, corporate governance, and index businesses. These products are a reflection of a robust governance framework centered around our responsible AI principles. Governance is centrally administered, eliminating the AI sprawl risk of more decentralized approaches. Leading this effort is an executive steering committee that includes our CEO and other senior members of our leadership team. The program is aligned with the U.S. National Institute of Standards and Technology AI Risk Management Framework. As Congress and agencies look to develop AI-related laws and regulations, we ask them to consider the following. Existing regulations and regulatory structures should be leveraged where possible. Like prior technological innovations, the adoption of AI technology does not necessarily demand sweeping regulatory changes. New regulations should avoid focusing on specific technology itself and instead be proportionate to the benefits, risks, and harms of the AI application. For example, the regulation of an AI tool to detect drug trafficking should not be the same as the regulation of the identical AI tool if it is used to approve apartment rental applications. The regulatory environment should endeavor to be flexible and allow for innovation. We support sandboxes to promote innovation and believe the regulatory environment should be transparent, with a feedback loop between government, academia, industry, and the public. And most importantly, the development of industry standards is critical. AI-specific regulation should be consistent and harmonized. Regulators should coordinate across borders. While we oppose the creation of a central regulator, we support leveraging NIST to coordinate across the government. It is also important to avoid a patchwork of differing state AI laws that could stifle innovation and harm the competitiveness of the United States globally. We want to enable the use of AI, not hinder it. NASDAQ is committed to using AI in a responsible, ethical, and transparent manner. We look forward to working with the committee and regulators to foster a supportive and balanced regulatory environment for AI. We believe that AI is a promising technology that can bring significant benefit to our industry and the wider economy. I would be happy to answer any questions you may have.
Well, thank you for your testimony. This has been a great panel, and I'll now recognize myself for 5 minutes for purposes of question. As I said in my opening, this committee has been at the forefront of examining how AI is impacting the financial services and housing industries, both during my chairmanship and the chairmanship of Ms. Waters. I want to use today's hearing to continue examining the range of benefits and potential risks of AI, specifically Gen AI and its challenges through some use cases. Mr. Zeckham, how do you envision AI evolving over the next decade to not only enhance market efficiency and risk management, but also to foster innovation and accessibility in particular of our capital markets?
Well, I think that's an important question. How does it democratize the markets? And I do think there are a couple of opportunities. For one, I think through the use, as I mentioned, of analytics and data, there's the opportunity to develop products, whether it's ETF products, unique products, that could be available at lower cost to Main Street investors. And I think that's a true opportunity for them to diversify. Similarly, I think you will see more of the analytics being used for investment advice. And again, targeting communities that have not been able to pay for individual tailored financial advice. So I think there are great opportunities there. In the market, I think you will see unique order types coming, but the part that I'm always interested in, being the head of regulation, is the surveillance end. And I do think AI can be a force multiplier for us in monitoring markets, looking for aberrant activity. Just think about the billions of trades that are going through the market. If you can have AI sort of do the triage, then the analyst can focus on a much more developed case.
Excellent, excellent. Well, Mr. Karunamurthy, I don't think we can overstate your testimony, and particularly you talk about the need for high-quality data, and I don't think we can really overstate how vital that is. So how does Scale AI ensure the quality and accuracy of data, particularly as it relates to input data as well as model structures?
Thank you, Chairman McHenry. This is an important part of our work, working with industry partners, and so we're happy to spend some time talking about it. The work that goes into making data AI ready is really fundamentally looking at the quality of the data that's going into these models. Do we have diverse geographic data? Do we have data from multiple different perspectives on a topic? And also helping the models understand what are authoritative sources of data. So where these models have been trained on a range of different perspectives about current events or financial markets, helping these models understand what are authoritative, sometimes proprietary internal sources of data that can better address customer questions. By paying attention to the data and how that data is shifting over time, you get a better sense of how these AI systems will perform. And it's a constant process of observation about where new data is coming in from, how the models can use more authoritative sources of data, and how that data can be improved over time.
Mr. Reynolds, I know that FIS is focused on the impact of technologies like Gen AI, blockchain, the deployment of blockchain technology, on fraud prevention, identity verification, existing customer due diligence procedures. Would you highlight the opportunities that Gen AI and blockchain technology, the challenges that it poses and the opportunities it is also presented?
Yeah, thank you, Chairman. When you look at Gen AI, obviously one of the foundational points about Gen AI is it's incredibly creative, and it really levels the playing field, both in terms of opportunities to enhance the system, but then attacks on the system. If you look at attacks on the system, one of the risks of Gen AI is it can very creatively come up with alternative identities, it can fake data, and it can fake data elements. And so one of the ways that I think we have to look at Gen AI and the potential blockchain is to understand, is there an opportunity to create, for instance, a digital identity that a consumer can have? If it's on the blockchain, it becomes immutable. And so it becomes a digital identity which over time as it exists within the system, it can gain permissions based on what it does in the system and where it is. That can sit on the blockchain, and it can be something that can allow consumers much greater access to financial services because that sort of passport, so to speak, allows them into the financial system. I think, though, again, we have to be very careful with generative AI because in our current system that is really reliant on basic identity elements like date of birth, address, social security number, it's very easy to fake now with Gen AI, and I do think it puts our current CIP system somewhat at risk.
Okay, but Mr. Zecca, Mr. Reynolds, you're talking about reducing the cost structure, which prevents this, which gains a huge advantage for market participants. I think that's an interesting outcome, and thank you for mentioning it. We'll now recognize the ranking member, Ms. Waters, for 5 minutes.
Thank you very much, Mr. Chairman. I'd like to address this question to Ms. Rice. We know that third-party tenant screenings and rent setting companies and the data they use are often the primary basis for landlord decisions about who has access to housing and how much renters will pay. Numerous lawsuits have highlighted how technologies have used inaccurate or discriminatory data that may not even be connected to the applicant or use data that artificially inflates rents. For example, the company RealPage, which offers rent setting algorithms to landlords, is currently being investigated by the Justice Department for potentially anti-competitive practices and sued by several states' attorneys general for allegedly using private data to artificially inflate rents and grow profits. What kind of rules or restrictions on data and transparency should be established for these and other types of third-party companies that affect housing access and affordability?
Ranking Member Waters, thank you for the question. So as it relates to tenant screening selection systems, which can often use data that can result in biased outcomes, data like criminal records history, credit scores, data like whether or not a person has ever been, an eviction has ever been filed against a person. That kind of data that is highly correlated to race can often result in discriminatory outcomes and can generate decisions that are not really, that data may not necessarily be predictive as to whether or not a person is going to be a good tenant or pay their rent on time. And so systems that utilize data that is highly correlated to race, like criminal records, that type of data should really be constrained and limited in models. And we think that when a model is using data that serves as a proxy for race or gender, that there should be higher protocols and standards placed around those models, and they should be regularly monitored and tested for discriminatory outcomes. They also need to be subject to our anti-discrimination laws. When it comes to dynamic pricing models, those also can present prohibitive barriers for consumers. For example, consumers who are using housing choice vouchers can often be denied housing opportunities because the the price setting algorithms are not predictable. You can go to an apartment complex in the morning and get one rental rate for a unit and go to the apartment complex in the afternoon and get a completely different rental rate that can exceed HUD's fair market values. So we have to have tight controls on these types of technologies that can, as I said, disproportionately discriminate against survivors of domestic violence who are disproportionately women, people of color, people who have disabilities, and other protected classes.
So when you say tight control, you mean legislation?
Yes, I do.
That would absolutely have the guardrails that are needed in order to protect the consumers.
Yes.
All right, thank you very much. I have another question that I'd like to ask Mr. Karuma Murthy. The complexity within AI models is not easily explainable or observable can result in unfair, biased, discriminatory outcomes that impact customers' lives. I think transparency of the underlying data of an AI system can help address challenges in explainability, bias, discrimination, and even compliance with regulatory standards. In fact, I led a delegation to Silicon Valley and met with several UC Berkeley scientists who warned that not being able to understand the outcomes of particular AI models is one of the most alarming outcomes and something that must be addressed. With increased availability of generative AI, more financial services companies rely on third-party vendors for high-quality training data for AI models. Your company, Scale AI, which provides data labeling services to companies, has a unique and important role in this ecosystem. This is a long question, and I've overrun my time, and so I think I'm going to have to bring it to your attention to get an answer following this committee. Thank you, and I yield back.
I thank the ranking member. We'll now go to the gentleman from Arkansas, co-lead of this task force, Mr. Hill, for 5 minutes.
Thank you, Chairman. Thank you, panel. Thanks for your indulgence this morning as we went and voted. Over the course of our many early morning roundtables, the committee heard from companies about how they're using artificial intelligence to lower compliance costs, better detect fraud, and enhance customer service, just to name a few. We also heard from the supervisors, from HUD to the PCOB to SEC and the bank supervisors, that they were all being principles-based in their looking at how to supervise AI. Taking this sort of technology-first approach to understanding AI use cases in the financial sector, in my view, has been central to our working group's approach. The problem with policy-first approach previously taken by the committee is that technology changes so quickly that we're stuck talking about yesterday's policy issues while the actual technologies and the use cases move right ahead. And that's sort of the challenge I've seen in other jurisdictions, like in Europe's approach to AI. So let me start out and turn to that European approach. Foreign jurisdictions have taken and seek remarkably different approaches to regulating AI. Mr. Reynolds, you and Mr. Zika both work at companies with a global presence. Mr. Reynolds, how would you assess the different approaches being contemplated, such as the comprehensive, good housekeeping seal of approval approach that Europe is taking? What do you think about that?
Thank you, Congressman, for the question. It is very challenging as a global company to deal with such differing approaches. In the U.S., we have taken a very open approach, and I think that has allowed a significant amount of innovation. We obviously, in my remarks, I noted that we strongly believe in good regulation, good regulatory behavior, and that is the strength of our company. So certainly I am a fan of following the rules as the Chief Compliance Officer, and I think it's important. I do think with the European approach, it tends to be fairly restrictive, and so I do think from the European approach, it can stifle innovation and make it harder, I think, for companies to adopt this new technology. And I think it creates an unlevel playing field across different geographies because the technology that will work well in the United States may not work very well in Europe, and it may be very different in Asia.
Mr. Zika, comment along that line?
I agree with that. I think when you look at the AI regulation in Europe, which is just going into effect now, it's been a 2-year process. And if you look at where they started to where they are now, it has changed a lot. And it's not only because there were comments, it's because the underlying technology has changed in those 2 years.
Kind of
so
hard.
The question is,
it's kind of hard to decide what you're.
Right. So now they've frozen it in time, in a way, and that's.
So that also speaks to another key point I think we heard in our roundtables, which is that. There's this presumption I picked up in the roundtables of, quote, non-compliance. In other words, there's this assumption that if you're deploying AI internally for internal compliance purposes or marketing purposes, that somehow you're oblivious to your existing supervisory, regulatory, or legal obligations under federal law. And so there's this, and Lisa, we've talked about this suspect that you're not in compliance. Which that may, generally, I'm going to say, stipulate that's probably not true, but how do how do we have people show their homework effectively? Mr. Reynolds, may go back to you just because you work with so many community banks, and then maybe we'll get a credit union comment there. But people are trying to comply with fair credit reporting, fair lending, right? When they use AI, they don't miss that obligation. They still have the obligation.
Yeah, absolutely, Congressman. I think compliance is really at the forefront of certainly all of our customers' minds. It's a forefront of our mind. The first thing we did in AI actually is to set up a governance council to ensure that we were following the laws, following the regulations, and really following ethical standards for AI and making sure all of our use cases followed all the regulatory standards and ethical standards. So I think that's critical, and I don't think anybody loses sight of that. I think the key is really auditability. We make sure that we are very clear as to how we're using it, why we're using it, what controls we have in place, and we openly share that with all
I think
of our
that's good. I mean, that's what we heard from supervisors. Show us your homework on how you got there. Let's hear from a credit union perspective on that.
Thank you, Congressman Hill. I agree with Mr. Reynolds' testimony and what he stated here. As a financial institution, we are subject to a myriad of regulations. So when we look at technologies, AI or not, and providers, the same rules apply. So any expectations we have of staff to ensure that we are adhering to compliance standards, any rules and regulations, that would need to be built into AI solutions as well. And then the expectation with third parties, which we leverage for services like this at an asset size like Great Lakes Credit Union, we then would develop with them reporting and monitoring.
Thank you. I appreciate that response, and I yield back the balance of my time, Mr. Chairman. Thank you.
We'll now recognize the gentleman from she's not here, so we'll now go recognize the gentleman from California, Mr. Sherman, for 5 minutes.
It's natural that we focus on the AI issues that confront us now and in the next few years, but I want to take a minute to say that we need to research and develop and deploy systems that will monitor for and prevent self-awareness, volition, survival instinct, and ambition in superhuman computers and artificial intelligence. The last time there was a higher level of intelligence introduced on this planet is when our ancestors said hello to Neanderthal. We then said goodbye to Neanderthal. And I do not look forward to being the Neanderthal of this century. We're not actually spending any money on a problem, and this problem won't affect us till the latter half of this century, but on preventing self-awareness and ambition in artificial intelligence. Now to the issues of today. When I first looked at AI, I said, great, decisions will be made without bias and without racism, because I couldn't imagine a machine being racist. And then I looked at a study came out of an elite university, and they looked at all the factors that causes a student to be successful at the university. And they concluded that the number one factor was being named Jared. That being named Jared apparently correlates to success at that university. It doesn't correlate with hopefully reducing and eliminating bias in our society. This is not entirely new. We had statistical analysis, then we had algorithms, we had computers, now we had artificial intelligence. At each stage, we face new decision-making mechanisms that deserve our attention, but it's not new in kind. We've made this jump before. I'm very excited about our ability to monitor for money laundering and monitor transactions, and particularly in the capital market, signs of insider trading. And I'm particularly concerned that crypto will allow us to see everything and understand nothing. We'll know all the transactions, and we won't know who's making them. Let's see, as to The one other thing that we have is whether it's hard and fast rules imposed on an employee, or whether it's a computer or AI. Clearly, a prior criminal record is not a positive. A prior eviction is not a positive. But if you're dealing face-to-face the old way, you can overcome that, perhaps. Whereas if you have AI and it gives so many bad points for a criminal record and so many bad points for an eviction, the computer makes the decision without the intervening human appeal. Ms. Osborne, AI will first be deployed by the giant financial institutions. How critical is it for a community financial institution or like a credit union to have access to affordable technology solutions and to have that in a way that is consistent with your compliance applications, all while competing with much larger institutions?
Yes, so thank you for your question, Congressman. In terms of our usage of technologies and partners to aid us in providing loans and decisioning to members, we, through our vendor or third-party management requirements, these are regulatory requirements that are across the board the same regardless of the size of the financial institution. Those standards are followed to ensure that we have a rigorous approach when looking at third parties. So when thinking about the different types of factors that would ensure there's not bias or decisioning for that would be unfair to one, we would then ensure that our technology is applying that same rules to that as well, and that we have the appropriate checks and balances, just like we would for a human.
Yield back the remaining second of my time.
The gentleman from Oklahoma, Mr. Lucas, is recognized for 5 minutes.
Thank you,
Also
Mr.
chair
Chairman.
of the Science Committee.
Thank you, Mr. Chairman. Advances in AI systems have led to a wide range of use cases with the potential to benefit nearly all aspects of our society. With the rapid pace of technological progress in artificial intelligence, it's essential that we encourage this innovation here in the United States. The best way to reduce potential risks associated with AI is to ensure that advancements in this field are made with American values. We shouldn't rush to regulate or put up roadblocks that will impede American leadership and have a detrimental impact on safety, security, and transparency. I appreciate Chairman McHenry for putting this hearing together so that we can hear from experts on the use cases of this technology. Dr. Linda, you discussed how Zillow is in the early stages of integrating AI tools into real estate transactions. How do you see this technology simplifying the house buying process?
Thank you for the question, Congressman. We do ask our real estate partner agents how do they spend their days, how effective they are at their work. And what they told us is that they spend most of their time with doing mundane, repetitive tasks. That's where we see that AI has a big role to play, functioning as a trusted co-pilot to really automating tasks. We recently experimented with AI call summarization, which is a great way that we can help agents spend their time with the customer and really putting the humans at the center of the real estate transaction. And the more we do that, the more we can enable customers, understand the process and eventually buy home.
Most agencies have existing authority to oversee the outcomes of AI systems within their respective jurisdictions. Dr. Linda, could you discuss how AI tools are deployed within current regulatory structures and how the policymakers can avoid impeding novel use cases for these systems?
Thank you for the question, Congressman. I think Zillow has been at AI development on behalf of our customers since 2006, and the whole time, Fair Housing and Equal Credit Opportunity Act has been our guiding principles. We constantly look at how this regulation can be applied the same way we've been applying to our business and our human operators as well to AI. We don't see any difference in there. As a specific example, we recently open sourced some of our work that enables you to use recent large language models and make them fair housing compliant and aware of the regulation. So from that standpoint, we feel that exploring how existing regulation can be applied to AI is the way that we can make a progress.
Mr. Zika, you discussed how AI allows for an extraordinary amount of data to be analyzed. Could you elaborate on how NASDAQ leverages this technology to track fraud and manipulation, and how this information is communicated to market regulators?
Absolutely. So if you think about in the financial crime area, the massive data, you're looking at activity that can go across accounts, people who have common names, a trail that may end up in a manual Google search. So it's really about tying the threads together to build a case, and AI can do a lot of that work for the investigator. My experience with bank compliance groups is they want to comply, but they are strapped, and there's a lot of information being thrown at them. So we've seen 35% increases in productivity because of the use of AI. So then those cases, when they're built, could be a report to the government. Alternatively, in the market surveillance where we do that, we would either prosecute the case ourselves or refer to the SEC.
Continuing with you, Mr. Zika, how transformative do you view AI to be in our capital markets? And how can our handling of this technology influence our status of having the most robust and liquid capital markets in the world?
Well, I think that's the core question, Congressman. How do we maintain our lead in the capital market? It's one of the great American advantages, and we certainly would not want to do anything that hinders that. I think it's important to remember that the financial sector is heavily regulated, and the regulators who oversee them are very knowledgeable about the market. And I think that piece is important when you marry that with AI knowledge for the oversight. But I think where it's going to make the most difference, I do think it's going to democratize products because you're going to be able to offer things at a cheaper price. I think the information over the long run is going to be more accurate and more digestible. And we will see unique trading opportunities that don't exist now that we can't even imagine. As I mentioned, we introduced the first AI order type, which had a fill rate improvement. We went through the SEC process, but I think there'll be many more.
With that, Mr. Chairman, I yield back the balance of my time.
We'll now recognize the gentleman from Massachusetts, Mr. Lynch, co-chair of the working group on AI.
Thank you, Mr. Chairman. Mr. Zaka, I know you're suggesting that democratization is going to develop, but if you look at what, so Sam Altman, I think he reported that GPT-3 cost $100 million, then GPT-4 was $400 million. Now they're saying GPT-5 is going to be somewhere between $2 and $2.5 billion. For these large language models, it does look like, because of the costs and the energy required, that there'll just be a few big firms that will control that market. And I'm just wondering, you're talking about democratization, but it doesn't look that way. It looks like a few big players that have sort of organic access to massive data sets, that those might dominate, and that would not be truly democratic. Push back on that, if you will.
Sure. Well, I think it's always something we have to consider, how the concentration is happening. When you break down the large language models, there are open source ones, they're non-open source, so there are quite a few providers.
Yeah.
And then in many cases, larger companies in particular, are using their own data sources. And then, of course, remember AI, we're talking about the large language model piece, but there's also the code writing side of it, which is different.
That's right.
Yeah.
That's
so,
right. And training.
So I think there are a lot of use cases where it's not going to be quite so concentrated. And even where it is concentrated, the end product, remember, the data lake, the model you're training it on, but then there's a lot of customization in what you're looking for. And let's say in the trading side, if you're a trading firm, you're looking for some advantage that makes your algorithm unique.
I guess what I was getting at is just the exponential increase in costs, and that's got to have a winning, there'll be fewer and fewer people that can do that. If the costs continue to escalate at the current rate, it's just exponential. But I appreciate you. I appreciate your opinion on that. And by the way, Mr. Chairman and Ranking Member, I'm very grateful for all the experts here. I know a bunch of you are frequent flyers to our roundtables, and you appeared at these hearings. So I am very, very grateful at the diversity of perspective here and the value that you bring to these hearings. I really am. I am grateful because we got a lot to learn. Mr. Reynolds, so if these smaller firms and maybe we can, I know you were at FinCEN for a while. These smaller firms, they are acquiring, they're not building their own data sets or models, they're acquiring them AI for service. On the one hand, it's great because they may, with the help of AI, they might be able to compete with some of these big firms. On the other hand, they're going to be relying on a third party for monitoring for compliance and for monitoring possible bias in their AI systems. How do we reconcile that? Or do you think most of the firms now that provide AI as a service are able to properly monitor what's going on in these small banks or smaller financial firms?
Yeah, thank you, Congressman. It's a great question and one that we think about quite a bit. As I mentioned, we have a very strong governance process around our models and around our AI. So when we deploy that technology to customers of ours, which are predominantly banks or brokerages, capital markets players, we obviously are very conscious that we are sort of the first level of defense. So we think of ourselves, I guess, by analogy as the belt. And the bank is sort of the suspenders, in that you have both the bank itself having an obligation to look at those tools, and we provide them information so they can make their assessment to ensure that it is operating as designed without bias. We also are very focused on that ourselves to ensure that it is. One of the ways that we really do that is to make sure that a human is either in the process or on the process, and I think that's critical for the technology at this stage. One of the great things is AI can learn, Gen AI can learn, so hopefully as it learns about mistakes it makes, you can correct those and it won't do that in the future. But to really do that, you have to make sure that you have human beings in the process to ensure there's basic concepts of human fairness that go into these decisions.
Thank you very much, Mr. Chairman. I yield back.
Thank you. Thank you for your leadership as well. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes.
Thank you, Mr. Chairman. Ms. Osborne, at our National Security and Illicit Finance Roundtable, the panelists shared that his firm has seen a 450% increase year over year in AI-powered deepfake attacks against financial institutions. As generative AI compounds in its ability to manipulate video and voice are better trained, this problem will only get worse. I'm concerned that the small community institutions, such as Mr. Lynch referenced here a minute ago, like yours, are going to bear the brunt of these attacks. Do you share these concerns?
Thank you for your question, Congressman. So at Great Lakes Credit Union and across the credit union industry, we prioritize safety and security for our members. Deepfakes are absolutely a concern. It's something that is top of mind. What we have done at Great Lakes Credit Union with our virtual assistant, because that is one risk that we have to monitor and manage too, is we recently introduced voice authentication. Voice authentication is one additional method of authentication for our members to use. We were very careful and considerate in the rollout of that method of authentication because we needed to ensure that it provides additional layers of controls for our members. The way voice authentication works with Olive, our virtual agent, is it's two-factor, right? So it's MFA in partnership with voice recognition. The member has to enroll in the program. That's the first piece. Then that technology, once they enroll and they use the platform, it combines anti-spoofing technology and compares it against 25 to 30 different factors, such as the phone number the member is calling from. In addition to that, the type of transaction that is being requested is risk-rated, and varying levels of additional authentication are offered depending on the transaction risk.
What are the risks do you face with generative AI that we're not thinking about?
That's a very good question. I would say generative AI is constantly changing, and so for our institution, for Great Lakes Credit Union, the challenge we have and the risks we have is how do we continue to ensure that we are meeting the best of both worlds, providing the service to our members while also ensuring the appropriate controls and guardrails are in place. So it's truly in partnership with our third parties that we work through that. Constant discussions with those third parties and check-ins help to ensure and mitigate that risk as much as possible.
You know, I sit on the China Select Committee as well. I had a briefing this morning, and AI is used to surveil the Chinese people. They spend $300 billion a year to surveil, detain, and build detention camps on their people, and AI is a big part of that. You know, so now in my seat here in the Financial Services Committee, we look at this from the lens of, oh my gosh, what can the Chinese do to us here using AI, which you guys have all talked about this morning, all the benefits of it, but there's some risks to it as well, and some real concerns, and those are the ones that I think that we as a committee have to think in terms of and figure out how we can protect the industries that we oversee, the individuals, the people of this country. And so I'm very concerned. I think we had a situation last spring with the run on Silicon Valley and those other banks where within 42 hours, within 10 hours, $42 billion went out the door. I can see a scenario where the Chinese are looking at artificial intelligence in many different ways. You figure out which one you want to take, but they could have an artificial intelligence generated commercial with Chairman Powell up there, or with Bloomberg, or with Dave Ramsey or somebody who is a recognized financial expert saying, oh, we got 100 banks today that are in trouble. And all of a sudden, everybody runs out, and we have FedNow, which is, as you know, almost instantaneous. Instead of taking 10 hours to do 42 billion, they do it in 10 minutes with FedNow, a year or so from now, perhaps. And so it really strikes me as being, while a wonderful tool, it also has got some really big challenges, and I'm very concerned about it. Do you think I have a right to be concerned? Mr. Zika, you deal with the NASDAQ folks. I mean, this has got to be concerning to them to have short selling going on with this sort of situation.
Well, thank you for the question. I think it is very important. You know, we've obviously had situations before where people have tried to put out fake information, but there is the risk that deep fakes have a level of legitimacy or apparent legitimacy that others don't. So we monitor social media trending to try to see situations that we may have missed where something came up.
So the question, it begs the question then, what do we as legislators need to do to be able to find, to come up with regulations or provide oversight in a way that monitors this or controls this, yet doesn't stifle the markets? But to me, we've got to be thinking about this, and I'm sure you guys have already thought about it as well. I'll have to ask the question later. I'm out of time, but thank you, Mr. Chairman.
The gentleman from Illinois, Mr. Foster, is recognized for 5 minutes.
Thank you, Mr. Chairman, to our witnesses. Mr. Reynolds, on page 5 of your testimony, you identify one area where you believe that congressional action is critical, which is updating customer identification programs and development of a digital identity system. Can you say a little bit more about that?
Yeah, thank you, Congressman. This is an area that I think for the last couple of years we've noticed growing weakness, I think, in the CIP and the CDD system. I think it started with Web3, where you have users who are able to exist on the blockchain, have anonymous or pseudo-anonymous identities, and are able to divert away from the legitimate financial system and really avoid some of the controls that we have. And so one of the things that I think is critical for us is as these controls start to weaken, as deep fakes become more prevalent, as the ability to fake identities become more prevalent, we need to think, is there a different way to think about identity? Identity essentially is, in our system, a proxy for trust. How much do I trust you? And I think based on how much I trust you is, do I know who you are? And so I think if we start instead from a basis of trust and think, how can I instead understand how much do I trust you without necessarily regard to identity purely, that will be the basis for a new digital identity system that will help solidify our existing CIP and CDD.
Yeah, no, in other countries, including, I guess, the entirety of the EU, they're going to an approach where you basically have the national government present something that's very similar to the digital driver's licenses, a real ID compliant digital driver's license, where if you want to open a bank account, you say, okay, get out your phone, do your biometric login, show it your face shape, and take advantage of the trusted electronics in modern cell phones to present a federally issued certificate that pretty much says, here is my proof that I am a single legally traceable person. And this will allow KYC, a single-step KYC in 30 seconds, with, which will really remove one of the big barriers to entry for like fintechs, setting up their KYC operations, or small banks. It's a real burden on them that could be avoided if you do what actually a lot of the states in the United States are doing, is just provide digital driver's licenses as a means of proving you are who you say you are in an online environment. And is that part of the solution we should be looking at for dealing with deepfakes and other?
Absolutely. I think that concept of the digital ID will make sort of banking portability a reality, and I think it will allow consumers to move very freely throughout the financial system. And as you note, it will significantly reduce costs, but significantly increase trust.
Mm-hmm. Yeah, Ms. Osborne, did you have any comments on it?
Yeah, so at GLC, we do not currently use or accept digital ID. However, it's an area that we are actively researching and hope to in the future pursue. Our biggest challenge at this point is really consumer adoption. You don't see the use of it, and nor there as many providers that we could leverage to integrate into our platforms for this. They exist, but they're still new. And so we're doing our due diligence and thoroughly vetting partners and solutions out there to ensure we make the right decision for our members when that time comes.
Yeah, and I think many people are also worried about sort of splintering a set of commercial identity ecosystem, so that, you know, maybe log in with Google or log in with Facebook becomes the de facto standard, and that makes a lot of Americans uncomfortable. That if there has to be a standard way to authenticate you are who you say you are, then that maybe is an essential government role to provide a way to assert your real ID, which is something you're going to need to get on airplanes soon enough. And if you can present that in a digital online format, as is you know, essentially the heart of the mobile ID that was developed by NIST. Let's see, this also relates, I think, to privacy in ways that I think people underappreciate. Mr. Karunamurthy, you have to deal with the various privacy bills that are moving through, and it's a real burden if all of a sudden a customer has the right to retract the data that your model has been trained on, and that if you've trained spent millions of dollars, how do you anticipate having to deal with that?
Thank you, Congressman. We absolutely at scale believe privacy is one of the important considerations to make when considering the data used to train AI models and the data that's used to observe and improve these models in the future. Well, we don't train our own models, and so that specific case is not something that we have to particularly consider. We do take into account privacy when we're considering different perspectives we can gain on AI models. There are certain situations where you can use proxies for actual customer data without using customer data itself and still gain a lot of insight into how an AI system will perform. And increasingly, we're using those methods to try to get good observability into how these systems operate without needing oversight of individual customer data.
Thank you, and yield back.
We'll now recognize the gentleman from Michigan, Mr. Huizinga, for 5 minutes.
Thank you, Mr. Chairman. Given the rapid advancements in artificial intelligence and potential on various sectors, what specific measures should Congress consider to ensure that AI technologies are developed and deployed ethically with adequate protections for privacy, security, and fairness? This was what ChatGPT came up with as a question when it was loaded in. Write a question for a congressional hearing on AI. So that was my team's idea to check in with the experts, apparently, but just to kind of make the point that I'll let others decide whether that's a more intelligent question than has been asked in this room previously by actual humans. But it is certainly the realities, and this goes back to the chairman's point right at his opening, which is this is the reality of our lives today. So I'm going to see if we can get back to that, but I got a couple of other quick things I need to do. And Ms. Osborne, I'm going to start with you very quickly. Credit unions are seeking to adopt more effective fraud management and the use of AI through that, and the impracticality of manually monitoring transaction patterns is certainly something that we've heard about for a number of years. But what are the barriers to incorporating AI-powered fraud analytics that you're experiencing?
Thank you for your question, Congressman Huizinga. So fraud is one of the 3 areas that we are currently looking to expand AI use in at GLCU, as I included in my written statement. We do not currently use AI for fraud. However, there are great benefits to incorporating that technology to improve accuracy.
Yep.
Really, the goal here is to not just prevent, but not just detect, but to prevent those type of fraudulent occurrences from happening.
Yeah.
And-
Are there some barriers, though, that are keeping you from implementing that?
Yeah, it's really about finding the right partner. So at our asset size is $1.6 billion institution, we are very dependent on third parties. And so we go through a rigorous process to ensure we find the right solution. Integration with that is also key. There's quite a few players out there, and it's constantly emerging and changing. So
Okay. All right, thank you.
welcome.
Mr. Zecca, in your testimony, you noted an estimated $3.1 trillion in illicit funds flowing through global financial system in 2023. Last year alone, losses from fraud totaled $485+ billion globally. How has NASDAQ used machine learning to address illicit activity? And then specifically, criminals are also using AI to develop new and more sophisticated financial crime strategies. What are you doing to out-innovate those folks?
Well, we have a whole team that tries to deconstruct and analyze the information we get from our banks. So under the Patriot Act, there's an opportunity for U.S. banks to share information. So through a trusted third party like us, so we are able to see the connections across all the organizations. It helps us build more valuable patterns that we can then implement.
And that's been somewhat controversial,
It has.
that third party and allowing insight in. I know that that has been an ongoing conversation. Sticking with you, sir, I want to discuss the AI Act. According to a recent article in Financial Times, European regulators admit the costs and compliance of the EU's new AI regulation could hit 6 figures for a company as small as 50 employees. Essentially, in my mind, being a small business owner myself, this amounts to a tax on small businesses, startups, entrepreneurs. It's another barrier that's being put in the way. And we're not talking about massive companies with massive compliance offices. So in your view, what lessons can the U.S. learn from the EU's approach to date? And I'll let you answer.
Well, yeah, we're still digesting it in fairness because it just came out. But I think the 2 areas that I would focus on is one act that tries to describe everything that's going on is a very complicated thing to do, and it does stick things in time.
Because in fact, I think you had written it down. I think you wanted to avoid specific regulation. And this was going to be a follow-up on that. I said but you also said you wanted consistent and harmonized regulation, and so I'm curious how that fits into flexibility. Because I agree.
Right.
I mean, I think Europe sort of locked itself in a box here in a way that doesn't seem manageable.
Right, it's true. And so, I think I'm talking about the world we would like to see, not perhaps the world we live in. But I think organizationally, having a general system of principles-based regulation, we're concerned about a central regulator, in part because they're not going to have the expertise about the underlying subject matter. Even if they have the AI expertise, it's the application that matters. So that's not the direction that Europe's going. They do have a central AI office. So I think that's another lesson we can learn here. And then, there is a concern about state regulation just, going in different directions. And so it will be very hard for companies to comply with different AI regulation.
I appreciate that. I'll yield back.
I will now recognize the gentleman from Ohio, Mrs. Beatty, for 5 minutes.
Thank you, Mr. Chairman and Ranking Member, and thank you to all the witnesses being here today. And let me give a special, Mr. Chairman, if I may, shout out to someone I call a friend, Lisa Rice, but more importantly, a few years ago, she received one of the highest awards that we gave for fair housing. So it's good to see you again today. I'll start with you, Mr. Linda and Ms. Rice. I'd like to kind of follow up on some of the questions we've heard, and especially from Ranking Member Waters. What legislative solution should we be pursuing to ensure responsible use of AI? Mr. Linda?
Thank you for the question, Congresswoman. We are really spending a lot of time thinking about how our existing regulations, such as Fair Housing Act, apply to everything we do at Zillow, including the use of AI. We see AI as the same, or solution that's similar to how we would instruct and train great real estate agents. We believe in proportional, risk-based, and flexible regulation, and to the extent that there are new gaps, we welcome the chance to be part of dialogue like this one, where private and public sectors comes together, and really putting the customer at the center of it, because ultimately we want to, put the customer first, find ways to help them get home and find a home in this really, really challenging market. And so that is the approach that we would like to put forward.
Ms. Rice, would you like to add anything?
Congresswoman Beatty, thank you for the question and for your support for fair housing over the years. So I do agree with some of the other speakers on today's panel that we should take a principles-based approach to legislation, but we also need to incorporate an outcomes-based approach. One of my members in Los Angeles just lost a case. In fact, they conducted systemic testing of an apartment complex that was using dynamic pricing systems. Every time they sent a tester of color to the apartment complex, the apartment rental rate was higher for the same unit. Every time they sent a white tester, the apartment rental rate, again for the same unit, was lower. And this was over and over and over again. When they brought the lawsuit, the landlord said, look, it's not our fault. We were using a dynamic pricing model. That model set the rental rate, and we're not liable because it's a third party that did it. And so if we make sure that we have comprehensive legislation that is both principles-based but also outcomes-based, we can close the loophole on those kinds of discriminatory practices we're seeing in the marketplace.
Let me go to another part since we're talking about housing. Let me stick with you. What is the role of AI in the underwriting process for mortgages?
Yeah, we're seeing, particularly amongst our larger financial institution partners as well as fintech partners, that AI is playing a critically important role. So Congresswoman Beatty, I'll lift up a positive. So one of the positive uses that we're seeing with AI is the ability to use rental housing payment data and cash flow data in the underwriting process. And the utilization of those two sort of non-traditional characteristics is actually expanding access to credit in a more responsible way. We know that credit scores, LTVs, DTIs, highly correlated to race, and they also result in lesser or lower access to responsible credit.
You mentioned race, so let me, while the clock is ticking. In the latest funding bill draft, House Republicans have eliminated funding for fair housing enforcement and blocked HUD's ability to enforce affirmatively, furthering fair housing provision of the Fair Housing Act. Can you discuss the importance of federal fair housing enforcement to combat automated discrimination in housing lending through online housing platforms with AI technology? And I got about 30 seconds.
It's extremely important, and the thing that I will say is that many of our business partners have recognized that if we eliminate discrimination, we will actually increase profits, will increase productivity. Citigroup released a report that showed if we eliminate racial inequality, we would increase the U.S. GDP by $5 trillion over a 5-year period.
You're getting some nods, so.
That's one of the reasons why the Business Roundtable in its platform supported affirmatively furthering fair housing and disparate impact so that those businesses can responsibly increase their footprint and profits.
Thank you. My time is up. Thank you very much for that.
We'll now recognize the gentleman from Minnesota, the Majority Whip, Mr. Emmer, for 5 minutes.
Thank you, Mr. Chairman. Thank you for holding this important hearing today, and like the others, I want to thank all the witnesses for your testimony. Mr. Karunamurthy, if I said it right, hopefully I did, you have had a long and very impressive career in machine learning and artificial intelligence. Just to get us started, I have a quick yes or no question. Have you contemplated any potential intersections between AI and digital assets?
Yes.
All right. I figured that was the answer. The nexus between AI and digital assets seems necessary and inevitable to me. In fact, there could realistically be a future symbiotic relationship between the two. In many ways, AI has opened our eyes to the reality of digital inauthenticity, and crypto ensures digital authenticity. In other words, the immutable nature of digital assets transactions offers digital assets and blockchain, it offers them up as at least one tool for authenticating. And if not potentially being the key tool, which is becoming increasingly unclear with the rise of AI. Of course, it goes without saying that AI offers significant promises and benefits to our economy. AI, along with digital assets, are leading us toward a powerful global digital economy. We just need to ensure this technology is crafted by Americans and with American values. Scale AI is at the forefront of AI development, given AI's need for reliable data. When I think of what makes data reliable, I'm not only concentrated on the data inputs themselves, but also the processes by which data is gathered and verified. Last month, there was an article in Cointelegraph that discussed the critical role of blockchain technology, the critical role that that technology can play to ensure that data used in AI models is authentic, immutable, traceable, and transparent. This would therefore give certainty. Sir, as you consider how data labeling will evolve over the medium and long term, do you think blockchain technology can be used as a tool to ensure data authenticity in the future? If so, how?
Thank you, Congressman, and I appreciate the opportunity to talk about the important role AI plays for the U.S. economy and American competitiveness. We consider this the most transformative technology we've faced in the last 20 years, and so it's important to get ahead of these opportunities and also highlight safety risks. The provenance of the data that we use to train these models and that these models leverage in order to come up with decisions is of increasingly important paramount for us to observe, monitor, and to find authoritative sources of information. So whether we're talking about the blockchain or digital identity solutions, those all have an important role to play in ensuring that data is accurate and up to date. We also have developed a variety of techniques that understand how these AI models leverage that data. One important one that we highlighted in our written testimony was red teaming, to understand that those models can be tricked or fooled in certain ways to believe that someone is who they aren't, or that or to reveal private information. And so we're developing a lot of those techniques that will come at the intersection of blockchain and other solutions in helping establish the provenance of the data used in the models and how that drives decision-making.
Thank you. I believe the convergence of blockchain and AI can not only improve the trustworthiness of data, but the decentralization of artificial intelligence data can mitigate single point of failure security issues. And additionally, as AI systems communicate with each other and need to transact with each other to obtain information, digital assets and AI can have that symbiotic relationship. Sir, what do you envision is the primary way that digital asset technology can engage and interact with artificial intelligence systems in the future?
Thank you. An important way is to make open and transparent what information is being used by these AI models so that as a public we can evaluate where these models are giving safe and responsible answers or where these models might have been misled. Having an open and transparent system to understand where data is coming from or where data has evolved over time can be incredibly important to the U.S. economy, and it's important for the evaluation of these systems.
Well, thank you. And finally, Mr. Karunamurthy, sorry, I was going to blow it at some point. To develop and lead in the next iteration of the internet powered by AI and digital assets, we need this technology to be designed and built by Americans and with American values. How can government support entrepreneurs and businesses like yours with the global in the global talent war to not only attract but to retain high-skilled tech talent right here in the United States?
Yes, we are absolutely in a global talent war, and we've seen increasing evidence that countries like China have really powerful AI talent, and they're putting them in positions of authority where they can train future AI models. We believe here in the U.S. it's important to highlight the role that developing talent and upskilling workers plays in developing the future of this technology, which goes beyond just researchers. It also means American workers need to understand how AI can be used to assist them in their job functions and understand where these models are capable or where they might not be capable today. So we're spending a lot of effort in helping upskill and retrain workers in the use of this technology.
Thank you, and thank you, Mr. Chair.
The gentleman from Illinois, Mr. Caston, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you also, Mr. Chairman, for putting together the AI working group. I think we've had really a very productive set of hearings, and thank you all, because I know a lot of you have come out many times for these. So in a lot of our working group hearings, I've raised this concern about disparate impact and the idea that, you know, you could have discriminatory outcomes independent of discriminatory intent. And there's a long history of companies being held accountable one way or the other for that. And I have this growing concern that you see a lot of people saying, well, the AI did it, I didn't do it, I didn't program it to do this, but you know, it just happened. Before digging into the questions, I'm not a lawyer. Ms. Rice, you are way smarter than this, and I thought you had in your written testimony like an interesting block on this. I wonder if you just share with us briefly the legal distinction between disparate treatment, disparate impact, the relative enforceability, and some of the things you've shared previously about what to think about before I get to the questions I want to go through.
Congressman, thank you. Sure, I'd be happy to do that. So an example of disparate treatment is where technology firms treat people differently based on their protected class characteristics. An example, a case example of that is in our lawsuit against Facebook, in which Facebook had a model. It designed the model so that if you were advertising for an employment, a credit, or a housing opportunity, you could turn off African American audiences, you could turn off Asian American audiences, you could turn off Hispanic audiences, you could never turn off white audiences. So that's an example of differing treatment. You're treating people differently based on their protected class status. An example of disparate impact is where you have a rule or a system that is not race-based, but it is generating discriminatory outcomes. An example of that is our lawsuit against Prudential, in which we challenged the use of their insurance scoring system. There were no factors. If you looked at the underwriting algorithm, there were no variables that were akin to things like race or gender, but it was generating discriminatory outcomes. In that case, Prudential had to prove that it had a business necessity for using the insurance scoring model.
And I'm sorry, because I'm just sensitive to time, but is it safe to say that it is a higher legal bar to get enforcement under disparate outcomes than disparate treatment?
Yes, under disparate impact.
Yes, lacking the smoking gun. Okay, so for those of you who are building and running algorithms, with AI algorithms, do any of you currently have in that code blocks that test for disparate treatment or for disparate impact? Just show of hands. Do any of you include those blocks of code? Mr. Zecca, you do include those blocks of code? Okay.
We do. We're not in banking, but yeah, for our order types to ensure that all customers are treated equally.
Okay. And Ms. Osborne, you didn't raise your hand. Was there any particular reason?
So at our size, we do not develop in-house
Okay.
AI.
Okay. So not a relevant question for you. Fair enough. Okay. So I'm glad that you do. And do you test for disparate treatment or disparate outcome? Right. Like in the example, like all of you who raised your hand, given as it's a higher legal bar, do you also test for the actual that you're getting different outcomes? Yes, across the board? Okay. Part of the reason I ask all that is because that's a legal bar, right? But there is this thing, Project 2025, that my colleagues across the aisle and the Republican candidate for president are making a big push on, when one of their provisions on page 538 is to remove disparate impact as a valid theory of discrimination for race and other claims. So if that, and by the way, Justice Thomas, Justice Alito have indicated in some of their dissenting opinions that they also don't think those are valid claims. If those laws were to be taken away, can you commit that you would continue in your algorithms to test for disparate impact? Or is this only something that we're doing because it's currently got some legal protection against it? Would all of you maintain those models, even if the government were to say discrimination is now fine because thanks to Project 2025, we're all good with discriminating? Do we have yeses? We're going to hold you to that. Thank you. I yield back.
Now go to the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you, Mr. Chairman. Thank you all very much for being here. It's interesting, fascinating, good to hear. So the EU's AI Act, which the Financial Times reported as rushed and vague, serves as a clear example where regulations are very often the problem. This specifically excluded technologies like generative AI, as we've been discussing, focusing instead on existing tools, highlighting the limitations of broad regulatory approaches. Considering AI's impact, we need to recognize the disproportionate burden that regulation places on small businesses. Small businesses typically bear regulatory costs more intensely, as evidenced by many things that this administration put forth, such as the CPFB's 1071 rule, FinCEN's beneficial ownership requirements, and the Basel III endgame. So, Mr. Zecca, I'd like to just start with you. The EU's AI Act is currently being implemented. How would you grade the European approach so far?
Well, I think the core question is, how do you prepare for the future? And the AI Act is sort of a point in time. And so my main worry is, as the technology develops, if you look back over 2 years, it's already moved from where they started because the technology's moved. How do you prepare for the future? I also worry about the context of a single AI regulator that's responsible for the enforcement, because I do believe that like, for example, in our case, we operate markets in Europe. There are prudential regulators for the markets. What happens if they disagree with the AI office? So I think there are a number of areas there that are unclear on how enforcement's going to work and how technology is going to innovate.
So how would the EU's AI Act affect NASDAQ?
So for our operations in Europe, it will have an impact. It will have an impact on a lot of U.S. companies that operate in Europe.
Okay. Do you believe these standards should be calibrated for the particular type of use case, or should it focus on regulating the technology broadly?
Well, thanks for that question. I think that's the critical idea. I think it's risky to regulate the technology because the same technology can be used for different use cases. You should regulate the risks and opportunities of the use case. For example, AFC, financial crime, one of the biggest things we want to ensure is that the financial sector can use AI to fight financial crime, even if there's not pure explainability, because we're trying to keep up with criminals.
Great, thank you. Ms. Osborne, your credit union is similar in assets to many community banks, maybe a little bit larger than many of mine. Can you describe how AI has helped you scale your business and better serve your customers?
Absolutely. Thank you for your question, Mr. Congressman. So at our asset size, $1.66 billion, currently in terms of AI, we are using it primarily for customer service. By introducing our virtual assistant, Olive, we have been able to streamline and really focus on the right level of support for our members, for those that require a human to interact with them. We provide that ability. We also, I see that as a great case study across all financial institutions. Anytime we can automate, we can improve the outcome of decisioning, and any type of data input today that's very manual, that's a great benefit, especially for not-for-profit organization like Great Lakes Credit
Was it
Union.
expensive to bring it on board?
No, it was in line with what my expectations are for technology of that size.
Are your competitors engaged in equipping themselves with AI as well?
They're starting to. So our current provider, Interface AI, they serve both banks and credit unions, and they have currently over 100 clients. There are several providers like them, so you're starting to see that adoption ramp up.
Right. When I was in business, or particularly in the early 2000s, we had a saying that if you don't use IT as a weapon, somebody's going to use it against you. So I would imagine your outlook on AI is pretty much the same. So if it were regulated to the point of, in line with the EU Act, for instance, where cost prohibitions came in to be, from the regulations that is, were excessive, how would that affect your ability to serve your customers in your day-to-day operation?
Yeah, so today's regulations are very technology agnostic, so it's a benefit for us. If additional regulations were proposed, that would increase the costs for our institution to serve our members. Those costs would have to then be passed down, and that would be a burden to our consumers.
Okay. I'm running out of time, but I'd love to also hear from perhaps all of you, what's some of the downside that you think about? We're talking about the positive aspects. What are some of the downside if somehow we can get that afterwards? I yield back, Mr. Chairman.
Gentlewoman from Massachusetts, Ms. Presley is recognized for 5 minutes.
Thank you, Chair McHenry, and to all of our witnesses for joining us today. As we examine the role of artificial intelligence in financial services and housing, we must be honest about the truth. The algorithms that value our homes, filter our job applications, and approve or deny our loans exist in a larger context of biases that have plagued our communities for centuries. This is evident in the home appraisal industry, where systemic racism robs families of color of generational wealth and economic opportunities simply because of the color of our skin. The data is clear, and the data is damning. Homes in Black neighborhoods are consistently undervalued by at least 21% compared to similar homes in predominantly white neighborhoods. This translates to more than $162 billion in lost equity for Black homeowners, opportunities denied, dreams deferred, and the perpetuation of the vast racial wealth gap that exists in our country. Now, some may argue that AI and automated valuation models offer an objective solution to bias and discrimination, but I caution against blind faith in these systems. These systems are only as biased as the data used to train them and the human beings who design them. Mr. Karunamurthy, is that right? I've been practicing all day. Names matter, and I want to get it right, okay? Is that all right? Okay. You are the Chief Technology Officer at one of the most financially valuable AI startups in the country. Are you taking a race-conscious approach to eliminating bias while developing and deploying AI technology?
Thank you, Congresswoman Presley. We do believe these are really important issues to consider in the future of this technology. And so from the forefront, or from the beginning of our approach to evaluating AI models, we've considered what different sort of perspectives are important to ensure that we're not just putting blind faith into this technology, that we understand how decisions are made by AI, what sources of data they're using, and that that data avoids bias in part of the course of action. So an example of that would be ensuring that when these models use geographic data, that they're not biased by prior sources of data and maybe information on regions or districts that may be out of date, or that may not give the full picture of what may be present in a given area. And then we try to ensure that these models explain their decision-making to human operators so that there can be human oversight of how these models came to the decision.
Thank
Thank you.
Thank you. And Dr. Linda, Zillow has been a major player in the home appraisal industry by making home valuation data readily accessible on the internet. How is Zillow ensuring that its AI algorithms do not perpetuate the financial services industry's long legacy of redlining and housing discrimination?
Thank you for the question, Congresswoman. It is absolutely a problem, as you pointed out, and we work tirelessly to measure, understand the bias. As an example, our Zestimate, our main tool that we developed that started a company to empower our customer with information so that they can often challenge some of the bias that you pointed out. Every change to the algorithm is not only evaluated on does it improve the accuracy, but also does it improve fairness, especially with respect to the dominant race of the demographic of the people living in the neighborhood. We did make some changes. As you noted, the neighborhood is an important aspect. We make sure our algorithm doesn't look just at a small neighborhood, but also look at a much bigger area, which allows us to be much more comprehensive and result in a more objective, accurate, and fair assessment of a value.
Thank you. Ms. Rice, you heard these two responses. Do you agree that technology companies like Scale AI and Zillow are doing everything they can to ensure AI tools and housing appraisals do not become vehicles for discrimination? Yes or no?
Yes, regarding Zillow, I don't know Scale.
And what steps should these companies be taking additionally, in your opinion?
I think Zillow sets for a great model, and we partner with Zillow a lot on responsible AI and fairness principles. So testing the underlying data to make sure that it is representative, make sure that it is accurate, and make sure that it is not missing critical information, testing the underlying data used to train the models to make sure that there are not proxies that are highly associated with race. So that's the pre-processing phase. In processing, making sure that you're testing those systems for their outcomes and you understand what the outcomes are. And if you're seeing discriminatory outcomes, recalibrating.
I have to reclaim my time. Thank you so much. It's clear that we need more transparency, accountability, and equity for both human and AI-driven home appraisals. We need robust, independent bias testing of AI systems, diverse representation in the appraisal industry, and a commitment to advancing racial equity from our regulators and industry stakeholders if we are to use AI responsibly and safely in our communities. I still believe in the promise of home ownership as a path to financial security and generational wealth.
The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank all of you for being here. And I'm a great supporter of innovation. I'm a car dealer in Texas. And artificial intelligence has been at the forefront of innovation. Across all industries, AI has assisted in making business operations easier and less time intensive, including in the financial services industry. And AI provides increased work stream efficiency and improved client engagement. It is important for us to understand this evolution so that we may continue to make the practice of running a business more efficient and foster greater competition within industries. So, Ms. Osborne, could you elaborate on how artificial intelligence helps you and your credit union make lending decisions?
Thank you for your question, Congressman Williams. At GLC, we do not currently use AI for lending. However, it is an area we are actively pursuing. I think it's important to note that 2 weeks ago, Karen Harbin, a CEO for a credit union, testified and spoke of her use of Zest AI and how that has helped her credit union be innovative as well as expand lending to areas, demographics, disadvantaged individuals that in the past, because she's lending outside of the credit score, she was unable to do so beforehand.
Okay, thank you. Mr. Linda, you mentioned in your testimony that Zillow has been using artificial intelligence in some capacity since the company was founded, and so you're no stranger to the expansion and ever-changing landscape of artificial intelligence. Some view artificial intelligence as dangerous and confusing, but you and your company have used it to turn something also confusing like finding a house and obtaining a mortgage into a more simplified, consumer-friendly process. So, Mr. Linda, how has Zillow used artificial intelligence to make the often opaque and stressful process of finding a home easier for consumers?
Thank you for the question, Congressman. As you pointed out, from the beginning of the company, we started by putting customer and transparency at the forefront of what we do and using AI to do that. Empowering customer with information, how much particular home might be worth, it was the start. And then we continue by using AI to help you find all the homes on the market. It's not easy to understand all the inventory out there, and AI, again, is a great tool to do it. And then during the pandemic, it became extremely useful to have an AI tool that allows you to virtually and remotely tour a home. These are just some of the examples where AI makes the process more transparent, accessible, and we are only looking forward how we can use the technology to further empower our customers to get them home.
Okay, thank you. One of the biggest challenges in running a successful small business is the number of roles owners have to play, from CEO to CFO to CMO to managing inventory and fulfilling or delivering orders. By leveraging AI tools, small businesses can access the same technology that big business use to their advantage, making them more efficient and giving them ability to make more informed financial decisions. Operating a small business is becoming increasingly harder due to challenges like high inflation, supply chain disruptions, and worker shortages. Artificial intelligence tools give small business the possibility to run smoothly and be able to tackle other issues that they face. All of this shows why small businesses should not be overlooked in discussions surrounding AI because they understand the competitive benefits and risk perspective. And I will say I'm chairman of the Small Business Committee, so this means a lot to us. And so, Mr. Reynolds, as Congress looks to potentially regulate emerging technologies like AI, how should we try to ensure that small businesses can access and use AI applications that allow them to compete with a larger market participant?
Thank you, Congressman. I think critical to that is that the regulation has to be designed to allow rapid innovation. I think obviously to the extent that we can innovate and lower the cost of the technology, that allows different market participants to be able to embrace the technology and use it. If you look, for instance, at FIS, we have some very large clients, we have some very small clients. And it's critical to us that we provide AI services and allow access to AI both for large institutions but also for small institutions, because that really does level the playing field.
I've got a limited amount of time. I'm just going to ask you another short question, Mr. Reynolds. Can you expand on the use of artificial intelligence by financial institutions to assist in risk management and preventing unlawful activity?
Yes, sir. We think actually that artificial intelligence in many ways is going to be critical to the evolution of combating financing of terrorism, combating money laundering, combating fraud. One of the most significant problems in that is the false positive rate. We all have seen that for years. It runs in the high 90%, sometimes even more than that. We really think that the use of generative AI, especially in fraud, is going to dramatically lower the false positive rate, which will again allow more transactions throughout the economy, but allow better transactions. We've seen some very positive results in early testing on fraud systems where we've dramatically reduced false positives and increased true transactions.
Okay, I yield my time back. Thank you very much.
Gentleman from Texas, Mr. Green is recognized for 5 minutes.
Thank you, Mr. Chairman. I'd like to associate myself with the remarks to a great extent of the chairman and also the ranking member. The ranking member has touched on some issues that are very important to me, and I'd like to look a little bit further into these issues. Ms. Rice, you indicate that artificial intelligence, and I'm reading from your message that you've codified, artificial intelligence is the new civil human rights frontier. That's a strong statement. The new civil rights, human rights frontier. But you go on to explain about data going in and how the data has been, over the years, it's been a part of a corruption. And when you put something in that is discriminatory, then you'll probably get information that's going to reflect what you put in. This, I'll be quite honest, it saddens me to know that we've suffered all of these years of actual discrimination, slavery, convict leasing, invidious discrimination in the form of segregation, and now artificial intelligence may not only perpetuate it, but do it in a more horrific way. Could you please elaborate more on why you would conclude that this is the civil rights, human rights movement of our time, perhaps? You say the next frontier.
Certainly. Much like the Industrial Revolution, the industrial frontier changed the landscape of our nation, of our economy, of our neighborhoods and societies. AI will be doing the same thing, we believe. It is going to drive innovation. It is going to be the main driver of every single market in our nation. And so from that perspective, we believe that AI and technology are the new civil and human rights frontier. And you're absolutely right. Bad data in means bad data out, which is why at the National Fair Housing Alliance, we have been innovating on new systems and constructs that compel legacy systems and new systems that are being developed to be fairer. Just a few months ago, we released a groundbreaking report on a new strategy that we have developed with one of our partners, Fair Play AI. That strategy utilizes distribution matching. It is a way of sort of globally optimizing for both systems for both profit and fairness to make sure that they are not generating biased outcomes.
Mr. Linder, you seem to have a similar position. Reading from your report, you indicate that we place a great emphasis on transparency, meaning your organization, and fairness in the housing industry, which has a history of discrimination and bias against people of color and other historically marginalized groups. And you go into the LLM, which is the large language model, and you give some explanations. But your views are very similar. Would you kindly explain to us why you have concluded that this is something that can be of harm to people of color and other marginalized groups?
Thank you for the really important question. I think any kind of progress is to start from a point of realizing what we're starting with, and any data we use, when building AI system will have imprinted past history of segregation, and we have to be accountable to it. We have to understand it. And to your point, AI can pose a lot of risk, but AI can also shed light on some of these things. We recently shared some of our research where we used AI to understand at the national scale what are the common phrases that are being used by listing agents when they put listings online. And we saw stark differences. And just from starting from a point of understanding that helps us to put that early on in our development cycle and build better products and better AI model because we are aware of this. And then secondly, we want to make sure that auditing models for fairness is a part of our everyday work. That's what we do at Zillow, and that's what we're trying to share with the community and publish our methodologies. It is a vital part of developing a responsible AI system for the benefit of our customers.
Thank you. My time is up. Thank you, Mr. Chairman. I trust we'll use it for good. Thank you.
The gentleman from Tennessee, Mr. Rose, is recognized for 5 minutes.
Thank you, Chairman McHenry, and also thank Ranking Member Waters for holding this hearing, and thank you to our witnesses for being here today and sharing your time with us and your expertise. I am proud to say that in my home state of Tennessee, there are already financial institutions that are leveraging artificial intelligence to bring great benefits. One such institution is Oak Ridge National Laboratory Federal Credit Union, or ORNL, I'll try to say it, based out of Oak Ridge, Tennessee. And thanks to artificial intelligence models, ORNL will be able to serve more customers and provide customers with a better experience overall. I am proud to say that Tennessee is home to financial institutions such as ORNL FCU, and hope that as we discuss and debate artificial intelligence regulation, we do not hamper innovation. Ms. Osborne, one area that interests me regarding the utilization of artificial intelligence is expanding access to financial services to those who live in rural communities versus high population areas. How does leveraging AI help to expand access to rural communities?
Thank you for your question, Congressman Rose, and also for your story. That's a great story to hear. At Great Lakes Credit Union, we have a similar story. We have introduced AI and seen great results from that. In terms of expanding access to more rural areas and just broadly overall, I can speak from Great Lakes Credit Union's perspective. By use of Olive, our virtual agent, our virtual AI agent, we're able to serve members where we're able to provide support to them 24/7. So regardless of where they live, what time zone, and what their needs are, they're able to have a conversation with Olive and get the support they need. That also plays into fact with other areas of AI that we are exploring that would allow us to lend to more members beyond the credit score that we weren't able to in the past that maybe are newer or in disadvantaged communities.
Thank you. I appreciate that insight. And there have been some concerns that consumers are limited in recourse against unfavorable decisions made by artificial intelligence. However, the Fair Credit Reporting Act and the Equal Credit Opportunity Act regulate adverse action when a creditor acts against a consumer based on their credit report. Mr. Reynolds, is it not true that adverse action regulation applies equally to human-made decisions and systems rules-based decisions or AI decisions?
Yes, it does.
Thank you. I think that's pretty plain and simple. And Mr. Osborne, as a former bank director, I know firsthand how burdensome and difficult it can be to compile Bank Secrecy Act information and share it with the appropriate agency. How can artificial intelligence be leveraged to help satisfy regulatory requirements?
Yes, so thank you for that question. Yeah. SARS reports is a perfect example. Any other type of reporting, if we have the ability to leverage technology like AI to automate, to make it more accurate and timely, there is tremendous benefit. That would reduce resource times, would improve our response times to meet regulatory requirements as well. And because it's more accurate, less review is needed, then we can utilize resources in better ways, such as improving or providing additional support for our members.
I agree with that. Mr. Reynolds, as financial institutions increasingly leverage artificial intelligence to better identify suspicious activity reports, will it not be imperative that they receive strong feedback from Financial Crimes Enforcement, or FinCEN, regarding the suspicious activity reports submitted so that their models are appropriately calibrated?
Yeah, I absolutely agree with that, and I think that this is something which AI and generative AI in particular really should enable the agency to much more quickly and much more thoroughly provide feedback real time, to your point, to make sure that models continue to learn the right lessons.
And I could not agree more. Frankly, I believe that the Bank Secrecy Act needs to be reformed in a wholesale fashion, but until then, FinCEN simply must provide productive feedback to financial institutions so that they can reduce the regulatory cost, the cost of regulation through tools such as artificial intelligence. And I can say firsthand as a bank director, I saw this repeatedly, and the lack, I suspect everybody up here who's had to deal with this directly, the lack of effective feedback from FinCEN is a major problem for institutions in knowing what to report. Thank you, Mr. Chairman. I yield back.
Mr. Horsford is recognized for 5 minutes.
I want to thank the chairman and the ranking member for holding this very important hearing, and to thank you, our witnesses, for appearing to discuss the ongoing adoption of artificial intelligence in our financial sector. AI has the capacity to change the way we work, the way we interact as consumers, and the very way that we live. As we examine the rapid proliferation of new AI development, we owe it to the constituents that we serve to remain forward-thinking on these trends, which will undoubtedly have a significant impact on their livelihoods. We have an ethical, moral, and societal responsibility as leaders to establish safeguards to ensure that the advancement of AI protects all of our communities, including communities of color. Everyone deserves equal opportunity to benefit from the transformational change of what I believe will one day be a powerful public good. The constituents I represent in Nevada and across the country as chairman of the Congressional Black Caucus are counting on us to be forward-thinking and to establish a responsible AI policy framework today so that everyone can enjoy an equitable deployment in the future. Recognizing the challenges ahead, the CBC launched the AI Policy Series to bring together leaders from government, industry, academia, and civil society to provide an overview of best practices to help shape these policies. Under the thoughtful leadership of Vice Chair Congresswoman Yvette Clarke, Congresswoman Barbara Lee, and Ranking Member Cleaver, we have explored the importance of design, the implications of job equity, and the potential impacts on the racial wealth gap. I want to thank the ranking member, Congresswoman Maxine Waters, for her leadership in bringing us to Silicon Valley to meet with industry leaders specifically. Similarly to the work done by this committee, these briefings have been focused on equipping members of Congress with the expertise that's necessary to apply existing laws to the utilization of AI and the understanding to identify regulatory gaps that need to be fixed before they lead to consumer harm. However, our work distinguishes itself by centering marginalized voices and examining the dangerous implications of bias that exist within AI. We must ensure that not only do our communities have the opportunity to participate fully in the transition to this technology, but to also develop the protections and the guardrails that can prevent the worst impacts of inherent bias in a proactive way. Both in lending decisions and automation of certain careers, unchecked reliance on AI can certainly lead to algorithmic redlining. So I wanted to ask Mr. Karunamurthy, how do you believe AI developers can proactively address the social and political values, including bias around race, that are appearing in generative AI today?
Thank you, Congressman Horsford. These are really important issues for developers to consider, but also folks adopting AI technology in industry and in financial services and housing companies. Two key parts of this process that I want to highlight. The first is concerning the data that goes into training these models and that these models leverage to make decisions. Ensuring that that data is authoritative and up to date is incredibly important. Also observing that you have robust and diverse perspectives in that data can be very important to ensure these AI models give objective and fair answers to given questions. The second is the importance of testing these models and these AI systems as they're built, observing situations where they may give a biased answer, and understanding how the decision-making process of these AI systems led to bias. This is an important first step in mitigating potential harms of these systems. It's also important for human oversight of these systems going forward.
Thank you. As these are the conversations that must be had if we're going to prevent discrimination within our financial system from becoming baked in the very start as we continue to train new models. But there's so much more that can be accomplished with these technologies if we're able to harness their capabilities to create, not hinder, economic advancement. Again, I think there's a lot more that we need to explore around the Fair Housing Act and the protections that are afforded and the dangerous positions that are proposed by Trump's Project 2025 that impact this proposal under that agenda. So I look forward to having further discussion with those of you on the panel. I yield back.
Gentleman yields back. I now recognize myself for 5 minutes. Start with you, if I can, Mr. Andre. Where are we? I'm looking down here. Sorry about that. Thank you for being here. One of the challenges we face in particular is home prices. The median mortgage has doubled in the past 3.5 years from $1,200 to $2,400 a year. Huge challenges with where we've been placed from the Biden administration as it relates to inflation. That will ultimately, God willing, come down as we get reckless spending under control. Other areas I think we have room for improvement is on the transaction costs on buying and selling homes. And so how has Zillow utilized the AI application to reduce the cost and complexity associated with selling a home?
Thank you so much for the question. We definitely recognize that affordability and the constrained supply is a big challenge for our customer and makes the already daunting process even more complicated. Where we see that we, and especially AI, can play a big role is in improving the ability of our customers to understand all the supply on the market. Imagine a customer who searches with a specific zip code, and they might only be shown that specific result. We use AI to augment their search results to make sure they're aware of the other options they have and perhaps lead them towards home they might otherwise not consider. Similarly, already was mentioned the cost associated with the process. The more we can automate mundane, repetitive tasks for lending officers, for real estate agents, the more efficient we can make them, and potentially some of these costs can be translated to the customer.
And that's ultimately the goal, Mr. Linda. And so, in particular, as we look at this, what are the concerns you have that an impediment might be placed from a regulatory standpoint, maybe with good intentions, but that would ultimately have a negative impact on the end user and the consumer?
Yeah, we truly believe that the existing regulations, such as the Fair Housing Act, should be applied equally to the business processes, the real estate professional, as well as to AI. So what we're looking for is, exploring how that could be applied. And of course, we're supportive on exploring additional risk, and we fully support proportional, risk-based, and flexible regulation that further enables a company like us and everybody else to innovate for the customer without stifling innovation.
Thank you very much. Let me jump over to you, Mr. John Zecca, if I can. Technology, specifically AI, can really drive down costs in particular and be a big benefit for markets. Can you briefly touch on how NASDAQ's identifying applications of AI that can improve the way the exchange works?
Sure. So I put them in two buckets. One is the trading activity itself, and we recently had approved the first AI-powered order type, and that was a process with the SEC to get them comfortable with the changes. It gets a better fill rate. I think you will start to see more order types that take market conditions into account. So that's one bucket. The second is in surveillance. We have an obligation to monitor our markets. We have huge surveillance systems that ingest billions of transactions a day. And so AI will help us get those cases together, and our investigators get a better case.
And as that's coming online, what's your interaction been like with regulators?
So the SEC has been very pragmatic and very interested. I find often when technology is being adopted, not only by us, but by the government, that there's just a different knowledge level. And I think AI, cloud before it, cyber, of course, are areas where the government is very focused as well. So that has helped the discussion because they do come with a growing knowledge base and they've been very constructive in their questions.
So then let's dive in. You're talking about the use cases for AI. In your testimony, you mentioned $3 trillion illicit funds flowed through the financial system last year. We're all working to reduce that. AI could be a significant tool. One example that's attracting a lot of attention is synthetic identity fraud, where criminals are using AI to present themselves as if they were legitimate customers. How's NASDAQ working to stay one step ahead of the bad actors?
Yeah, so we're working with our customers. So we're not a bank ourselves, but in the AFC side, we're working with community banks, large banks. And so those organizations in the check fraud area, which is a huge and has been a growing problem, in the money laundering area, they're coming with problems that they feel need to be addressed. And so we are using those as the case studies as we try to develop our technology.
And are these criminals utilizing AI to try to defraud or avoid BSA, AML filters?
I think there is some of that. I mean, they are using technology to try to, in the check fraud space, have more realistic looking checks that they're stealing, in an AML, move their money more transparently. If I could make one point, I do think it's important that regulators recognize that there are different use cases and the regulation that should apply to them should be different. So if we're fighting financial crime, we probably should have a different standard than using the same technology in another space. And so I think that's something that regulators need to consider.
Thank you very much. Thank you all for being here. I'll now recognize Ms. Garcia for 5 minutes for purpose of asking questions.
Thank you, Mr. Chairman. It is great to see some familiar faces. We've visited either before here or in the task force. So I first want to thank Ranking Member Waters for her leadership on this very important issue. In addition, of course, both to the chair and the ranking member for creation of the working group. It has been a pleasure to work with my colleagues as we explored AI, its use, and how to ensure the United States proceeds in a safe, competitive, fair, and efficient manner as more and more people learn to work and live with AI. We all know how expensive AI models can be. For example, our local institutions cannot afford to invest and create their own AI models. Ms. Osborne, as of right now, are smaller institutions like your credit union able to compete with larger entities?
Yeah, thank you for your question, Congressman Garcia. So as a $1.6 billion institution, if we compare that in size to all banks and all credit unions, we are considered smaller.
Smaller. So are you able to compete?
We are able to compete, and that's due to third-party relationships that we have available to us. We're too small to develop AI in-house.
Okay, so what can we do to better support our community-based organizations as AI becomes more and more of a commonplace?
Thank you for that question. I would say our existing regulation is technology agnostic. So that right there is a great starting point. We have the guardrails in place to enable financial institutions of all sizes to proceed with entering into relationships like our current relationship with Interface AI. One area that would be helpful is if our regulators provided a statement or clarity in terms of where AI fits in that regulation. My assumption, and in partnership with Vice Chairman of the NCUA, I joined an AI panel with him last March, and we had great conversations about the needed clarity in regulation in which AI is considered technology. We consider AI technology, thus regulation exists for that.
What about any security concerns taking place when your financial institutions or other small entities explore the adoption of third-party service?
So we have a very thorough third-party management policy and program due to regulation. That applies across the board, no matter which partner you're looking at. So all technology partners, including AI. So one factor that we spend quite a bit of time looking into is the security of that particular partner. We look at any type of data breaches they may have had, what their reputation in the market is. We review their financials. We spend a great deal of time vetting that partner before we make a decision. That long, lengthy process is important to ensure we provide safety and security to our members. It also is why sometimes it takes a bit longer to make a decision on a partner, but it's the right reason to do so.
Well, I was encouraged about your comments with regard to addressing some language access issues. So is there not enough language access AI third-party providers out there already that you all can easily adapt?
So I can speak to our current relationship with Interface AI. That solution provides the ability to speak 80 different languages to our members. We are just scratching the surface by offering Spanish very soon. After that, we plan to introduce Polish. AI is constantly evolving and moving, and so I see the adoption of language somewhat newer and be made available to us. So I expect that will continue to grow over time.
So since your English version is Olive, will the Spanish version be Popeye?
It will be Olivia.
Olivia.
Olivia,
Okay, well,
yes.
we'll take Olivia. Okay, well, thank you so much. Mr. Carew Murphy, in your opinion, could AI impact these jobs or similar jobs to those in my area, which are like longshoremen, construction workers, and pipeline workers? So many workers are just scared of losing their jobs. How can we reassure them?
Thank you, Congresswoman Garcia. This is a really important factor for us to consider as this technology gets adopted across the U.S. economy. American workers are some of the most capable, intelligent workers on the planet, and they are immensely capable of leveraging this technology. However, we have to make a broad adoption in upskilling workers and helping them understand where AI can be trusted and where AI needs additional oversight in order to be used successfully. We consider that the important work that we do here at scale, and hopefully we can be more competitive as an economy as we leverage this successfully.
So how can we reassure them not to be scared?
I think it starts by helping workers understand where we are with this technology, what the limitations of it are, and where the real opportunities are, so that folks feel that this is something that assists human workers rather than something that's just going to replace jobs.
All right, thank you. I yield back.
Gentleman yields back. Gentleman from Kentucky, Mr. Barr is recognized for 5 minutes.
Thank you, Mr. Chairman, and I want to first say how much I appreciate the work, the good work of the working group on AI in this Congress, and it's important work because AI and related technological progress in financial products hold a lot of promise for innovation. A responsible approach to developments in financial technology is to strike the right balance between innovation and regulation to ensure that AI generates net benefits and enhances the well-being of Americans. We must recognize that government regulators already have regulations, rules, guidance, and laws in place that put restrictions on uses of technologies by financial institutions. Congress and any future administration must be exact and definitive in identifying AI use cases for which those tools are thought to be somehow insufficient. And Congress should not defer solely to often opaque regulatory agencies to effectively legislate through regulation on AI and related technological innovations. We should instead rely we should not rely on simple fears and speculation on potential adversities of innovation. As well, I believe that as regulatory agencies themselves adopt AI or utilize their own regulatory algorithmic black boxes, they must adhere to the same principles and regulatory treatment that they require of the private sector. Mr. Zecca, let me ask you a question first. Do you agree that federal regulators of financial institutions, including the Fed, FDIC, and OCC, already have regulations, rules, guidance, and laws that place restrictions on use of technologies, including AI, generative AI, and the like, by financial institutions and third-party vendors with whom they contract?
Well, thank you for the question. Yes, it is one of the most heavily regulated industries in the world.
And one of the pieces of feedback that I'm getting, especially from smaller community banks and community financial institutions, is that when they rely on a third-party vendor that provides AI services, they're concerned that regulators would hold them accountable for the artificial intelligence and the algorithms developed by these third-party vendors. Should the law provide a safe harbor for especially small community financial institutions and allocate the liability properly?
Well, I think it's an important question. I would look at it from the perspective, I think any organization is going to want to know what's going on, so there's going to be a natural interest for the organization to understand what's happening. At what point does liability come in? I think that's a point for discussion. We are a vendor to a lot of community banks, and we work collaboratively with them to ensure that we're meeting their needs and that they understand the processes that we're using.
Well, let's direct that question to Ms. Osborne. What's your view on the liability that could attach to a credit union, for example, when using a third-party vendor?
Yeah, so thank you for your question, Congressman Barr. From my perspective, an AI third-party provider is a technology provider. And so the same rules apply for all. I do not see a benefit of assigning liability for specific AI, where if we think of the flip side, the argument that we've been making is that AI is a technology provider, so we should, with technology agnostic regulation, treat them equally. From our perspective, AI providers, we do treat more as a critical vendor, so they're vetted more thoroughly. So if that vetting and review is done properly, we should have awareness of technology providers that may not be meeting the needs of the industry.
For any of our witnesses, final question, for any of our witnesses, can anyone comment on the activities at the CFPB? These days, the Bureau has shown itself to be more inclined to move the market by intimidation and supposition rather than by evidence and administrative procedure. And industry players responsible for developing the innovative AI solutions that can create beneficial change for consumers need an informed regulator that establishes and maintains reliable, consistent rules of the road. Are you all observing overreach by the Bureau and fear of speculative regulatory actions that would stifle innovation? Anyone worried about CFPB stifling innovation in artificial intelligence? No? Maybe? Okay, crickets. Okay, well, the reason why I asked that question, my time's expired, we have heard from some fintechs that this is actually going to hamper bank fintech partnerships. With that, I yield back.
Gentleman yields back. We now recognize gentleman from North Carolina, Mr. Nickel, for 5 minutes.
Thanks so much. Thanks to our witnesses for being here with us today. I'm very glad we're holding today's hearing on artificial intelligence, or AI. It's important that Congress, and particularly the Financial Services Committee, doesn't fall behind as new technology advances. Also thanks to Chair McHenry and Ranking Member Waters for their work on this in a bipartisan way. And of course, thanks to our current Chair, Fitzgerald, for traveling around the world on a bipartisan CODEL where we made AI a significant part of the work of our group as we traveled the world. First question, Mr. Zeckett, to you. The financial services industry seems to be ahead of many other sectors when it comes to AI. Not only have market participants been using it for many years, but we already have a strong legal framework to protect consumers, prevent discrimination, and more. We need to determine what tools we already have to address AI, assess regulatory gaps, and continue to encourage innovation here in the U.S. Do you agree with that? And what tools does the federal government already have to address AI?
I do agree with the premise. I think that the federal government, I'll talk about the agency that I work with most, which is the SEC. Not only are they in the process of adopting AI for their own operations, but they also have a great familiarity with the markets, how technology changes have come, and they have looked at changes in the past. So you ask, deep fakes or other things that might impact market stability. Over the years, the SEC has come out with circuit breakers, limit up, limit down bans, which stop trading around stocks. So there are a lot of changes that have been made over the years that would apply to AI just like any other issue. So I think there's a lot of work that's already been done.
And can you talk a little bit about regulatory gaps? What do you see there, and what should Congress be doing?
Well, I do think that it's always important with new technology to see where the gaps are. I think the technology is still evolving in many areas, so where a gap may develop may not exist yet. So I think in areas we want to look at market stability, use of deep fakes, certainty about individual identities are all things that I think are important. But over time, gaps will develop, and I think that's the beauty of the regulatory process. Aside from legislation, there's the opportunity for specialty agencies that are experts in the area to take action.
Thanks so much. Ms. Rice, next question to you. In their latest draft funding bills, House Republicans have cut funding for fair housing enforcement and blocked HUD's ability to enforce the affirmatively furthering fair housing provision of the Fair Housing Act. Can you discuss the importance of federal fair housing enforcement to combat automated discrimination in housing and lending through online housing platforms and AI technologies?
Congressman Nickel, thank you for the question. Yes, what we know from decades of research is that when we remove discriminatory barriers from the marketplace, we actually increase profitability and productivity. That enables companies to expand their footprints, right, and have a broader market reach. And so that is one of the reasons why some of the largest lending institutions in the United States of America joined with us in asking the previous administration to not place undue restrictions on the disparate impact rule that would disable entities from being able to appropriately use disparate impact to analyze their systems for fairness. It is also one of the reasons why the Business Roundtable, of course, which is comprised of the nation's largest corporations in America, adopted a platform calling for the adoption of a strong affirmatively furthering fair housing rule. When we level the playing field for everyone, we increase productivity and opportunity.
Thanks so much. Mr. Reynolds, to you, AI-generated audio and visual content, also known as deepfakes, has armed criminals with a new tool, contributing to a significant increase in the frequency and sophistication of attacks against or through the financial services sector. In addition to attacking financial institutions, deepfakes have the potential to create widespread panic, confusion, especially when combined with social media, leading to consumer fraud, scams, and significant risk to the U.S. financial stability. How's your organization and industry responding to these emerging threats, especially combating malicious AI-generated audio and visual content?
Yeah, thank you, Congressman, for the question.
And I realize now we have 5 seconds.
Very briefly, we are looking at 2 things. One is reinforcing existing controls that help stop that. Secondly, using generative AI to actually combat generative AI.
Thanks. I yield back.
Gentleman yields back. We now go to the gentleman from Georgia, Mr. Loudermilk, for 5 minutes.
Well, thank you, Mr. Chairman. Thank you all for being on this panel. It's a very important subject, something I've been very interested in since I've been in Congress. I spent 30 years in the IT industry, and I think back from when I first got involved, how quickly technology has grown since then over the previous 30 years. In fact, if you go back and you look at how the internet has grown, it was the internet that drove most of the technology advances. And if you look at these devices here, they've grown so much over the past few years. It's interesting to understand that the least used part of this is the telephone, right? Because that was the most heavily regulated. The reason we saw such advancement in information technology is because of our entire structure, our economy here. Technology has been the least regulated. It's been free from a lot of excessive government regulation. Now, a couple of Congresses ago, I was ranking member of the first Artificial Intelligence Task Force. And what we were talking about then, as far as AI, is different than what we're talking about today with generative AI. And so I'm thinking 3 to 5 years from now, we're going to be having an entirely different conversation about AI. And I agree with some of the testimony is if we can stop in government from stamping out innovation and working to allow, with constraints, with guardrails, to protect individuals from from AI, and I understand a lot of people are scared by what they don't understand. But we can see a lot of advancements that are good for the industry there. So with that, Mr. Reynolds, in previous hearings about AI and financial services, I hadn't had much of an opportunity to discuss the technology's application in payments and financial messaging. We've talked about fraud detection and prevention, but I'd like to talk about how AI is used to streamline and improve payments messaging. As you know, by early 2025, Fedwire will have completed a transition into the ISO 20022 financial messaging standard. The SWIFT network will have fully phased out as SWIFT MT format and transition to the SWIFT MX format, which is also aligned with that same standard, and by November of next year. And the ISO 20022 provides for much more information-rich messaging than the older messaging standard. Combined with artificial intelligence, this standard could vastly improve efficiency in payments, messaging, and create positive feedback loop in improving messaging algorithms. All of that leads up to this question: what benefits could a more information-rich financial messaging standard have in terms of integration with artificial intelligence?
Thank you for the question, Congressman. I think, as you noted, as we move to a more information-rich architecture, it certainly allows for greater speed of payments. It allows for greater accuracy of payments. What it also allows is, on the regulatory side, it allows us to better understand how particular companies, how particular individuals are using payments, which should also increase our ability to deter and detect fraud. It should increase our ability, for instance, to protect vulnerable populations. We look consistently at, for instance, elderly account holders, and how can generative AI systems perhaps look at behavior of their payments, notice anomalies, and potentially intervene to protect more vulnerable account holders. So I think when you see those more information-rich environments, there's certainly, I think, economic benefit for the system, but I think there's also a benefit to the consumers as well.
All right, thank you. Follow-up question on that. For the banks and businesses that FIS works with, what benefits could the new ISO 20022 standard combined with AI algorithms have in terms of payment messaging, if any?
It will certainly make them more secure. I think, to start with that, safety and security is always one of the primary concerns that we have at FIS, and to ensure that for our clients. I think additionally, again, as I noted before, we work with very large institutions, we work with very small institutions, and everything in between. And I think that moving to this standard and moving to that technology platform will allow us to really deploy technology that all firms of varying sizes can use, which levels the playing field.
Mr. Zika, regarding trading, how does this messaging standard apply in securities? And is NASDAQ using any type of machine learning to process or analyze trading and settlement messages?
So we are. The surveillance piece is where we're the most active with machine learning and moving into generative AI. So trying to assess all of the data in the market and determine patterns of bad behavior, insider trading, and things like that. So over time, I can see we did have the first order type recently approved by the SEC that has AI in it. But I can see other use cases for it down the road.
All right, thank you. I yield back.
Gentleman yields back. We now recognize gentlewoman from Michigan, Ms. Tlaib.
Thank you, Mr. Chair. You know, I know you've heard from a lot of my colleagues, and one of the areas, though, I think is really critical to talk about is, you know, while AI may offer a number, but it can also promote what we call market concentration or manipulation, and deepen existing power imbalances that we experience in the 12th Congressional District in Michigan, and also lead to discriminatory outcomes. AI, as you all know, played a large role in boosting investor ownership in a single-family rentals, for example, has been documented. These institutional investors are often highly concentrated in specific markets, purchasing more than half of single-family rentals in Atlanta recently, and controlling 75% of rental homes, I believe right outside of Nashville, Tennessee. And because such investors use LLCs and special purpose vehicles, it is often impossible to know true market share that they enjoy. We've also seen how RealPage is being used by many landlords to set rental prices now, which is so incredibly scary. For example, it has been reported that 90% of rental units in large buildings in Metro DC right here in the area are priced using that software. President Rice, what challenges does AI pose in terms of facilitating market concentration or manipulation? Can you give us a sense whether what legislative gaps exist and what we could be working on, such as, I've heard folks talk about a national rental housing registry to get clearer picture, but I don't know really what the answer is, and would love to hear from you.
Thank you, Congresswoman Tlaib. Yeah, you're absolutely right. So AI is powered by big data, and so your ability to effectively build AI models and use them is going to be associated with your ability to sort of harness and amass large amounts of data. You have to be able to get the data, you have to be able to control it and use it. And we know that larger institutions have a much better ability to acquire the huge data sets that are necessary for building AI systems. And as you noted, we also know that large institutional investors have been able to use AI to strategically purchase single-family homes and take them off the market. We believe that there has to be both a principles-based and an outcomes-based system of legislation so that we can accurately govern AI systems.
And just to kind of lead into the next kind of issue, my team and I have noticed that AI has regularly tipped the scales towards landlords, in favor of landlords versus tenants. And I know a host of technologies have been deployed by specific landlords to screen tenants, to collect payments, to evict families, and more. And these tools raise a significant concern of the algorithmic, whatever, that bias, I can never say that word, digital surveillance, and data collection and security. Data collection should scare all of us. Today, tenants might actually have to grapple with, racially biased facial recognition technology, which I've been pushing my colleagues to ban in our country, or be forced to use apps to pay rent or, communicate with their landlord. So President Rice, can you touch base on some of the issues being raised on what we call now, I think in the nonprofit or folks or people that work in housing, the landlord tech movement?
Certainly. One of the primary concerns related to prop tech is the inability of consumers to get accurate information about the decisions that those technologies are making. So for example, if you are denied because of a tenant screening selection system, you do not currently have the right to know why that system denied you, or even how it denied you, or perhaps what data was used to deny you. If a dynamic pricing system is setting a rental price at a certain level, you do not currently have the right as a consumer to know, to see the transparency about how those rental prices were set.
I ran out of time.
Gentlewoman's time has expired. Gentlewoman from Missouri, Ms. Congresswoman Wagner.
Thank you, Mr. Chairman. Mr. Zecca, I appreciated NASDAQ's participation in the AI Working Group Roundtable earlier this year, and as a global technology provider and operator of exchanges, could you please describe the ways in which NASDAQ utilizes AI in its products and across markets? Briefly.
Sure. Well, I think you put it into the three categories. One is potential order types, in other words, adding liquidity to the market. The second is using both data and analytics to allow corporates and investors to make better decisions, so giving them higher quality data collated in different ways. And finally, it's ensuring that the markets are well surveilled. We also have solutions that work on compliance reporting and regulatory reporting, and then perhaps the most exciting is always we fight financial crime. We help eliminate money laundering and other financial crimes.
Yeah, that is key. What guardrails, sir, are in place to ensure there is proper security, oversight, and governance of AI?
Yeah, so the corporate governance piece is important at each company. What we tried to do was start with the governance process, and so we basically blocked off all access, and we made a single path for approval, and that created a single inventory of all the models. So we know that all of the models are going through the same rigor. We assign a data scientist to each project, and then the cross-functional group that approves all models includes lawyers, risk managers, and they look with our ethics policies how we are implementing and where the human interaction is and ensuring stability and all the other accountability and all of the factors that you need.
I care deeply about retail and I'll call mainstream everyday investors saving for their retirement and for the future. How does AI benefit the millions of retail investors participating in our capital markets? And could you please provide a few use cases?
Sure. I do think there's a huge opportunity here. Again, it's early days, but what we see are the main opportunities with that data and the analytics that we talked about. You can create products, unique products that allow Main Street investors to diversify their portfolios at a reasonable cost, types of tools and access to various investment vehicles they never had before. You can also see a world where they can get financial advice provided through AI with human intervention, but in a way that they probably could not have afforded if they had to get individual advisors. So I think those are two great examples.
You know, I serve, I'm proud to serve as the chairman of the Capital Markets Subcommittee, and as you highlighted in your written testimony, participants in our capital markets have been using AI for decades. How has NASDAQ approached this technology over the years, and how has it changed with I'd say the development of Gen AI?
Well, Congresswoman, I think you hit on the important point. A lot of the guardrails that we developed in the past, I think, apply with AI. So the markets over the years have built up a lot of contingencies for aberrant trading activity, for fast movements in the market. There's circuit breakers and other things. We also monitor social media to try to discover attempts to manipulate stocks. And so all of those help us now, but I would argue we have the potential to enhance our monitoring with the AI as well. So AI will help us detect fraud.
Would you describe how AI applicants are enabling a fairer and more efficient financial system?
So I do think, as we said, the access is one. I also think that the financial crime is another one. There is a huge amount of financial crime that is an impact, it's a tax, but it also supports a lot of the crimes that we're most concerned about, human trafficking and terrorism.
Right.
If AI can allow investigators to zero in much more quickly on potential crime, I think society benefits, and that's a huge equalizer.
Mr. Zecca, last year the SEC approved NASDAQ's filing to introduce the first exchange AI-powered order type. What is this new order type, and which market participants benefit from this, and what kind of engagement have you had with the SEC?
Sure. Well, the order type basically, it's a midpoint order type, and so it's people who are not as focused on speed. They just want clarity of execution, so it kind of freezes the market for them. Normally, that was a static period, and what we have done with AI is take market conditions into account. So it's a variable time horizon, and that has increased and improved the fill rates. So that was something we had to explain to the SEC, and they came with very intelligent questions.
Thank you. My time's expired. I yield back.
Gentlewoman yields back. We now recognize gentleman from Ohio, Mr. Davidson, for 5 minutes.
I thank the chairman, and just to stay, it's kind of out of order how I had my questions, but to stay on the capital markets theme there, Mr. Zecca, NASDAQ's got a unique perspective on the market, obviously straddling some of the biggest tech companies in the world. One of the challenges that we see with, the standard trading desk might have an analyst, kind of a math geek and a programmer, and they work together in tandem. And you could see how AI could do a lot of the work of analytics, could do a lot of the work of the code, and might even be able to accelerate or lower the bar for the skill needed in the math. So it could change that function. But then you have core things that seem to be a challenge in the market right now. I mean, in theory, put-call parity is a reality, but we all know there are shorts that are oversold at times. How do you see AI bringing reconciliation to markets like that? Problems that aren't getting solved today. You can see how it takes out labor, and it's something that really works pretty efficiently already. How are we going to use AI to solve problems that aren't getting adequately solved yet today?
Well, I think the first thing to remember is that the industry is heavily regulated. There are a lot of organizations, including the SEC, FINRA, and us, watching the market. To the extent our tools are enhanced by AI, our capacity to catch activity that actually does violate the law increases. So I think that is a net positive.
Okay. Well, I hope that put-call parity will be a reality using blockchain or AI or something aside from just regulators that seem to miss a lot. But hey, you know, sports have refs that miss calls every now and then too. When we review them, maybe we can make them right somehow. We'll see how that goes as we continue to talk about regulating our capital markets. You know, Dr. Linda, real estate is front and center as people are dealing with inflation and the cost of living today, the cost of home ownership or even residence for people that are renters is one of the biggest challenges for households. If you look at Zillow, you guys have really created a hobby for lots of people. In some free time, they'll go out and check. If I'm traveling, I'll say, oh, you know, what's the market price for a house here versus where I live or whatever. So you collect a massive amount of data. But on that consumer end, you know, we've talked a lot. Several other people have asked questions on that. I'm curious if you've got any insight into the rental market. Because DOJ just did an investigation into a software company in Atlanta that was analyzing rents. And they were basically helping the biggest private equity groups and hedge funds and REITs buy this software and rig the rental market to inflate prices and frankly raise the barrier. What's out there to offer hope for the consumer that we could find a way to lower the cost of home ownership?
Thank you for the question, Congressman. I think you're getting to the key of how Zillow's trying to benefit the customer using AI, and that's with transparency. Similar to how we have a Zestimate, our key model that puts a price on every roof in a for sale market, we also do that in the rental market. And on every home, customers can see what that rent might be. And that empowers them with information that they can use potentially to have a more informed discussion with that landlord and challenge them or ask them, why is the price you're asking me that much higher? That it's another application where AI is used for the benefit of a customer by providing more transparency.
Yeah, and this particular software company would target the biggest, wealthiest funds and create a barrier to entry so that they had a market there. And, you know, as we've all experienced, somehow Zillow makes money. It's all free out there, and, you know, maybe we'll save that for another scenario, but the tool is available for consumers, and it does give people some availability. And so finally, Ms. Osborne, you know, look at credit unions. Ohio is certainly home to many of them, and you know, it works for our communities. And you look at the costs, you're generally looking at third parties that you have to partner with in small business. As a small business owner myself, you know, we couldn't build everything we wanted. You had to find trusted vendors. What's the regulatory burden like for you guys? And on the other hand, you know, you've got regulators that are pushing you guys to collect massive amounts of data and engage in Operation Choke Point 2.0, 3.0, whatever version of regulatory things there. What promise does this offer for you to run a more efficient operation and serve your community better?
Thank you for your question, Congressman Davidson. So from a financial institution perspective, and as a smaller credit union, there's significant benefits of using AI. I found pricing from third parties to be comparable and as expected for the services they offer. Weighing that against regulation, so our existing regulation is technology.
Thank you. I'm sorry I didn't leave you much time with
I know,
the
it's okay.
question. And please feel free to reach out to my office. My time's expired, and I yield back.
Gentleman yields back. The gentleman from Iowa, Mr. Nunn, is now recognized for 5 minutes.
Well, thank you very much, Chairman Fitzgerald, and thank you for the panel being here today. Together, we have spent more than 6 sessions going over an engagement on the future of artificial intelligence, its impact here, and the technology that comes with it. Nowhere is this more clear than the financial sector, and its opportunity to revolutionize where we're going. We recognize already today the human to AI ratio output is roughly 1-to-1. But I think we all concurred, in less than 5 years, that output's going to look more like a ratio of 1 to 1,000. It's a bold new space we're in, and with this comes both opportunity and clearly challenges, as we discussed on this. In the course of certainly my time here in Congress, we're going to see AI advance to a over $4 trillion industry, and has the opportunity to revolutionize economies around the globe. At the same point, it's enfranchising some of our greatest adversaries, both in the nation state and at the hostile actor level. Generative AI, as we noted, is going to touch every aspect of this, and it's going to unleash not only the economic productivity, but the power of communities like mine back in Iowa. So I want to start here with a conversation on, how to implement this. We have a number of regulatory challenges. We have innovation being sparked, and as what we learned from you is that there are a lack of lanes in the road in where operators are going to be. In short, I believe we need a plan, which is why, working with this team, we've introduced HR 7881, the AI Plan Act. 7781 discusses the opportunity for private sector to help work with key leads in the government sector, Treasury, Commerce, Homeland Security, to both help inform this but shape something that's meaningful. So I want to get started with you, Mr. Reynolds. Do you believe artificial intelligence requires an entirely new legislative system and a regulatory regime that comes with that? Or can we start to apply some of these existing laws and get us on the same sheet of music or on the same level of code, if you will?
I think certainly in financial services, the existing regulatory regime is sufficient to deal with AI at this point. I think if we were looking at something more broad for AI, I think a principles-based sense that really is sort of technology agnostic. I think the challenge is with AI and generative AI, the different use cases will demand very different regulatory solutions, and so I think a one-size-fits-all will be very difficult for AI. But specifically in financial services, where I obviously specialize, I think the existing regulatory regime right now is sufficient.
I would agree with you. In fact, I think by the time we write laws, the level of AI that we have is probably going to advance beyond that. The principles base seems like a much more prudent approach. And I appreciate the innovation coming out of the private sector on this. Ms. Osborne, you shared with us from your perspective, both at the credit union level, something that's hugely important for my main streets, my hometowns. The challenge here that we saw from the national security side, we heard from the CEO of Pindrop that there's been as much as a 450% increase in deep fake voice attacks using artificial intelligence. In fact, as little as 2 seconds, a deep fake voice can be changed, fundamentally changing how you do consumer protection. Who do you see as your ally on the government level to be able to address when a small credit union like yours gets attacked? Who do you pick up the phone and call?
Thank you for your question, Congressman Nunn. So we are regulated by the NCUA. So in the event we had a security event or risk, we would reach out to both the FBI as well as the NCUA.
So, not unlike our cyber attacks here, has that been flushed out? Because the challenge is when you get attacked, it's the same type of AI generative attack that can happen instantly to be able to hit a ton of credit unions, banks, lenders, all at the same time. Who in the federal government do you think is on point to deal with this?
I am not sure of the answer to that, so I'd have to get back to you on it.
You're not alone.
Okay.
I'm not sure after our conversation, Congress is fully aware, and I would offer the federal government. All the more reason I think we need to have a collective effort when we're still at this 1-to-1 ratio versus when it's 1 to 1,000. With my few seconds remaining here, Mr. Karunamuthi, you highlight here some of the future threats. What do you see that we should be dealing with today in Congress to help better the AI space? But I want to talk specifically about what threats should we be looking at now?
Absolutely. These threats are real. We know that state actors like Iran and North Korea are using generative AI technologies to help spread misinformation, to probe our cybersecurity defenses. It's important to leverage techniques such as red teaming, which can help understand where AI systems are vulnerable and find ways to build more resilient systems. We have a great partnership with the CDAO within the Defense Department, and we hope to build more of those collaborations to spread more resilient systems in the future.
So I could not agree with you more. I think there are good best practices out there. We need to incorporate more of them from recommendations on the private sector panels like this into what we're doing at the federal government. I appreciate you being here. I look forward to the future. Thank you, Mr. Chair. I yield back the remainder of my time.
Gentleman yields back. The gentleman from South Carolina, Mr. Timmons, is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank all the witnesses for being here today. Before the late 20th century, evaluating creditworthiness in the home buying process was poorly standardized. Essentially, a home buyer's ability to repay a line of credit was based on prior relationships to lenders and was highly subject to class, race, and gender biases. As a result, home buying was largely unattainable to many Americans. However, in 1989, FICO invented the first standardized consumer credit score. Upon its adoption, determining one's creditworthiness became easier for consumers and lenders to determine, and a standard was created that limited bias in the home buying process. The results speak for themselves. As our technology has progressed, so have the factors that go into determining creditworthiness. This has led to the development of standardized credit scores, which provide an even more objective snapshot of an individual's risk profile. And by innovating how we viewed creditworthiness, we allowed the American dream to be accessed by a never-before-seen number of Americans. Despite the complex quantitative analysis being conducted throughout the lending process, the financial services industry continually has to fight back against claims of systemic racism and preferential lending. AI technology is no stranger to the financial services industry, as machine learning has been leveraged for a variety of use cases over the course of the last decade plus. The technology's continued development means it can potentially serve as a powerful tool to help financial institutions mitigate claims of discrimination. By implementing unbiased algorithms and rigorous oversight, AI can enhance objectiveness and transparency in the decision-making process. It has become clear that the technology's ability to process large tranches of data will make it yet another tool to use to determine risk and open up access to credit for many more Americans by removing human biases from lending decisions. Yet my colleagues across the aisle are seeking to stifle the technology's implementation amid new claims of bias and discrimination being contained within AI data sets. I believe that with appropriate oversight and intentional implementation, that is something that can be easily avoided, and with transparency, we can all come to agree that that is not a problem. Dr. Linda, would you agree that with proper data inputs, AI has the potential to expand access to lending opportunities and enable more Americans to access the credit they need to buy a home?
Absolutely, I believe in that. And I can give you one example. At Zillow, if you're renting homes through the Zillow platform and the landlord works through Zillow for the payment, you can opt in to have your rental payments submitted to the credit reporting agencies, and which actually we've seen, and as was pointed out before, can expand the access to credit. And so we truly believe that AI has the potential as we look forward with the existing regulations.
Essentially using additional data inputs to make it more fair and more transparent.
Yes.
Thank you. Ms. Osborne, what role does AI play in the lending process, and how has the industry begun to adopt AI technology, and has it expanded access to credit for more individuals?
Thank you for your question, Congressman Timmons. So currently at GLC, we do not use AI for lending. However, it is an area we are exploring because of the benefits it introduces. To be able to lend to individuals that we're unable to determine creditworthiness for today. There was a testimony 2 weeks ago by the CEO of a credit union, Karen Harbin. She spoke of a relationship with Zest AI. Zest AI enables just that. So she's able to use that platform to lend to disadvantaged individuals by going beyond the credit score and using transaction data like frequent bill pays, you've paid your utility company 12 months in a row, things like that. That's a great benefit to AI that really broadens the capabilities of financial institutions to lend to those in need.
And you would do that by accessing their checking account and seeing the monthly payments and that they're made on time? Is that how you would do that?
Absolutely, yes. We have access to a wealth of data that we should be using for those type of decisions.
Thank you. Dr. Linda, you kind of touched on this, but how else has Zillow utilized AI to expand homeownership opportunities?
We do that by informing the customers of the process. We are exploring how they can, find what it takes to buy a home, by empowering them with information of, for instance, what a home is worth, by making it easier through AI, through things like natural language search, to find homes on the market and understand what home they might be purchasing, and by empowering the real estate operators to spend more time with the customer, touring homes in person, walking them through the process, and really getting them to the home they eventually want to move into.
Thank you for that. AI is here to stay, and we need to use it to the best of our ability while mitigating any adverse impacts it can have. Appreciate y'all being here, and with that, Mr. Chairman, I yield back. Thanks.
Gentleman yields back. Now recognize the gentleman from Tennessee, Mr. Ogles, for 5 minutes.
Thank you, Mr. Chairman, and thank you to the witnesses for being here today. AI is certainly on everyone's mind these days. It seems like it comes up in almost every conversation that I have with constituents or stakeholders. Since my district includes part of Nashville, Music City, I've learned a lot about the music industry's hopes for and concerns about the technology. On one hand, as you might suspect, they have concerns about how intellectual property will be protected as generative AI comes into wider use. However, many in the industry are also quick to point out that AI-based tools are incredibly useful in things like music production and strongly caution against taking reckless actions that could hinder the use or development. I bring up that example to highlight a principle that also applies in the financial services sector. While everyone, including companies in the industry, lawmakers, and policymakers, consumers alike need to be attentive to ensure that AI tools are used in a way that upholds the rights of all parties, protects rather than diminishes their security, and ensures fairness. We also have to ensure that we're not stifling beneficial innovation. And let's be honest, that's when it comes to AI, that's a little bit of a challenge, right? Where's the gives and takes there? There's a lot of innovation using AI, so we don't know all of the ways it could be useful or empowering, driving down costs, improving access to financial products, or empowering the creation or expansion of businesses. But with that, there's also some downsides that we may not quite realize yet. So, Ms. Osborne, in your written testimony, you described the NCUA's risk management rules as robust, and you note that their previous requests for information have indicated that they understand the credit unions face considerable and wide-ranging competitive pressures where AI can help. In your experience, at least so far, is the NCUA's regulatory approach to credit union use of AI striking a good balance between ensuring compliance with the law and welcoming beneficial innovation where there's room for improvement? Ma'am?
Thank you for your question, Congressman. And I do. The regulations that exist today provide the appropriate guardrails to make decisions on use of AI. AI is a technology, and our regulation today, as it stands, is technology agnostic. So it currently applies. AI fits nicely into that. Where I do think there's an opportunity for further clarity is a statement or some type of comment from our regulator, the NCUA, that AI is a technology, and then therefore it would fall within our existing guardrails.
Well, you literally jumped to my next question.
Oh.
So you note that the adoption rate of AI programs by credit unions is still relatively low. Do you believe that it would be helpful to increase adoption if the government would give you some sort of statement or some clarity on the issue and how they can and can't be utilized? Because, again, when you look at the regulatory state, especially in the financial services sector, there's always that hedge of getting too far out in front of the regulators, because if you do, then they snap you back and they penalize you in the process.
Yes, it's an excellent point, and it is a concern that has been shared with me from other credit unions as well, and it creates hesitation to engage in a partnership with an AI solution where we all know the benefits of AI technology are so ginormous where we still can't measure it. And so by providing that clarity, it would help credit unions and other financial institutions to make better decisions on that.
And then, and this is somewhat, subjective, of course, but when you look at AI and if it can truly be implemented in such a way to, from your perspective, further vet someone who's coming in for credit, because you're having lower risk or you've lowered your risk, thus you have lower defaults, there's a savings there, there's a profit factor, but a savings there for the consumer, right? That also increases access at a time where you have greater inflation, where rents have increased, and quite frankly, for a lot of individuals, the pursuit of the American dream and that picket fence is slipping away. You now have the opportunity to get some of those people back into the equation. And so I do think it's imperative, Mr. Chairman, that as we look at AI, as we look at, especially into the financial services sector, that we encourage, if not force, the CFPB, the other NCUAs, et cetera, to provide clarity so that our financial institutions can be bold leaders in this space, both from the perspective of protecting consumer data and the consumer themselves, but also creating better and greater opportunity for those that otherwise may not qualify. With that, I had other questions for most of you, and I apologize for not getting to them. I really appreciate all of you being here and sitting there and being, enlightening us on this issue. With that, Mr. Chairman, I yield back.
Gentleman yields back. I'm now going to recognize myself for 5 minutes. I just had a couple of questions. I am a member of Financial Services, but also a member of Judiciary. I happen to be the only member on both committees right now. So I did have a couple of questions. I thought maybe we could just go right down the line. And Mr. Karuna Murthy, let me direct it to you first. What safeguards do we have in place to avoid copywritten material? And then the second part would be on anything you'd want to hold a patent on. Do you have any comments on that? And then we can go right down the row and everybody can kind of give us a short answer on that. But
Thank you. It's important to understand the role that IP rights and copyright plays in the development of this technology. We take this approach of testing and evaluating how models perform in really interesting scenarios to understand when the models might have been trained on material that might be problematic, and situations where that model might output that material. That's an important first step in understanding what the impact of the violations of IP rights may play in the development of this technology. We hope that that'll inform future discussions over how to understand the data that's used to train the models and what data can be used in the future.
Thank you for the question. We certainly comply with all the existing regulation and our contractual obligation to our partners who do publish data on platform like Zillow. To your question about patenting, we lead with transparency. We try to share a lot of our methodology, including open sourcing some of it. In occasions, we do have a regular process where we explore what from our technology we want to patent, and we use our legal patent expertise to guide us through the process.
We, at our current asset size, we do not develop in-house AI. We use third parties, so I can't really comment on that.
Thank you.
Thank you, Congressman. As a technology company, obviously, our product is intellectual property, so this is a particular current concern for us with Gen AI. One of the issues right now that exists in the industry where I think there could be clarity is the ability to either copyright or patent products that involve Gen AI or have used Gen AI in their creation. So that's obviously something we're very focused on and looking for increased clarity in the legal regime around that.
Very good.
We too, I would agree with the comments, Mr. Reynolds. We find the process of trying to obtain a patent extremely difficult and very costly. We are a nonprofit organization, so our ability to hire very expensive attorneys is very limited. There are not a lot of attorneys that have expertise in this area. And they charge very, very high rates. So anything that can help democratize that patent process would be beneficial to nonprofit groups.
Finally, I would just note we're spending a lot of time right now on data ownership and control, so we're rewriting a lot of contracts to ensure that we have the same, we have mutually agreed ownership rights and understand what our rights going forward are. And just think more broadly on intellectual property, including patent ownership, as AI becomes more involved in creation of patents, what are the patent rights, I think will be important.
Very good. I will yield, and we'll now recognize the gentlewoman from California, Ms. Kim, for 5 minutes.
Thank you very much, and I would thank all the witnesses for joining us today. It really was an honor for me to personally serve on the working committee on AI, and through which, through many discussions that we've had through the roundtable discussions, I learned a lot, and I'm glad that now we're having a full committee hearing at this setting to display the AI capabilities and the new opportunities that the technology may bring into the financial services sector. As you know, advancements in AI have created a lot of potential, but there are also a lot of fears about how AI will change how we interact with one another and conduct our work. History tells us that skepticism of new technologies is often unfounded and misplaced, as was the case with the railroad 200 years ago, and most recently, personal computers. So, Mr. Reynolds, let me ask you, question first. One of the issues raised in our working group discussion was the issue of AI explainability. In your testimony, you highlighted how explainability is part of your core principles as you integrate AI and Gen AI. So can you touch on how you are meeting those core principles on explainability and addressing the black box issue?
Yes, thank you, Congresswoman. I think fundamentally we start from the premise that that I think you touched on, that for Gen AI to be successful, it really has to be trusted. One of the ways that we think it is imperative for it to be trusted is explainability. If people see it as a black box, if they see it as something where they don't understand why the result is coming out of it, then they're never going to fully trust it. That's not to suggest Gen AI won't make mistakes. Human beings do all the time. Gen AI will also, and it will hopefully learn from those mistakes as you educate the models. Fundamentally, what we try to do is we really start from a first principles of adhering to explainability as well as the other principle-based areas that we talked about. And what we do is we actually have rigorous regulatory guidance within the company where both in terms of intake and then in ongoing supervision of the models, we look at them very carefully to ensure that they constantly adhere to those principles.
And that's how you're enabling AI models to be audited, right?
Yes, ma'am.
Yeah, okay, thanks. How is AI being deployed in the payments industry to detect fraudulent payments or any other nefarious activities?
So I think if you look at AI more generally, it's been deployed across payments and in the industry for quite a long time. It originally started, I think, at very basic AI that was more of a rules-based system and has grown over time to machine learning. I think what we're starting to see now, though, and we've started to prototype some of this and started to test it and seen very significant results of much lower false positives, but also importantly for consumers, much more payments that are allowed because they're not flagged inappropriately as potentially fraudulent. So we think actually what we'll see is for consumers, we'll have much less false positives, which makes the system safer and faster, but we will also see better payment flows.
Thank you. Let me ask a question to Mr. Zecca. I want to continue on that track on how AI can be leveraged to fight criminal activity. So can you talk about how hard it would be to identify millions of data points that identify criminal activity without the use of AI?
Well, thank you for the question. I think it's critical. We are on the frontier of a new opportunity to connect the dots. When you look at any financial crime, you are looking for a needle in a haystack. You're trying, the people that we're up against are trying to obfuscate, they're trying to hide their activity. And sometimes it's a question of different bank accounts, different leads, different countries. So AI can perform a lot of that work so that the analysts are, the investigators get a much more developed case and they get fewer false positives, as Mr. Reynolds was saying. And I think that is a potential game changer, particularly as crime gets more sophisticated.
Considering you're leveraging AI to improve the effectiveness of financial risk management programs, can you speak about the accuracy of AI in identifying illicit activity? And are there any real case studies you can share with the committee?
Well, let me come back with that because I think it's an interesting question on the case studies and I don't have them handy. But what we've tried to do, first of all, we do validate it through our own work and of course our customers because we're selling these to banks and institutions that are also doing their own validation. We're seeing about a 30% increase in efficiency. Now, of course, and that means a reduction in false positives. Now, that's not the same thing as saying everything is going to develop into a case, but we are definitely getting people on the road to getting to those cases faster.
Thank you very much. My time's up. Appreciate you.
The gentlelady's time has expired. The gentleman from Nebraska, Mr. Flood, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I had the great privilege of serving on the AI working group, which I really enjoyed. And before I begin my questions, I'd like to quickly recall some of the main takeaways I had from those roundtables. I think it's worth starting with a simple explanation of terms. Artificial intelligence covers a lot of ground, including some technology that's not really all that new. I personally am a little less interested in the use of things like algorithms, which have been around for a long time, than the use of technology that has shocked the world since the debut of ChatGPT, for example. While we identified a number of interesting use cases with the financial service industry for artificial intelligence, we found less use cases for generative AI specifically. A lot of the use cases for generative AI that we did hear about, for example, its use in chatbots, don't necessarily raise the types of red flags that I worry about as much from a regulatory standpoint. I know that some of my colleagues are very concerned about the potential for things like AI discriminating against people based on race or ethnicity. That's a hugely important issue. There is no doubt that if a company discriminates against protected classes in a violation of law, they need to be held liable, regardless of whether it's an algorithm or a human that did the discriminating. To the extent that there are gaps, I think it's appropriate to have a conversation about legislation to fill them. That being said, I didn't necessarily see lots of evidence of that in our meetings. And when you think about it, that may be partially because companies have used AI in things like underwriting for many years at this point. And while the term AI sounds new, some of what we're talking about today isn't new or groundbreaking. That leads me to one of my main takeaways from these panels. I think that some of the greatest threats from AI in financial services are not necessarily going to come from how regulated entities use or misuse the technology, but how nefarious actors could use generative AI. On that note, I want to mention that I worked on a bill with my colleague Rep. Peterson that is noticed for this hearing. It's called the Stop Deepfake Scams Act. It's a good bill and a bipartisan opportunity to highlight some of the problems that we're having in the face and age of generative AI. Mr. Linda, I want to briefly pivot to generative AI use in the housing market. You indicated in your testimony that Zillow is interested in using generative AI tools in real estate transactions through your platform. Can you expound on that? What specific ways would you use generative AI in real estate transactions?
Thank you for the question, Congressman. Focusing on a customer, we do see generative AI being a great tool in terms of informing them of the process. We did ask many of our customers, would you use generative AI and how would you feel about it? And they share with us that often, especially first-time buyers, feel that it's difficult to ask a landlord a question, what does it take? They feel like they might be judged, and if they cannot afford a home. They actually express that having something like a chatbot, having an experience that's always available, patient, can answer them with factual information would be actually useful to get them the information they need. On the professional side, we see big use for generative AI to save loan officers and agents time from mundane, repetitive tasks. Things like AI-powered call summarization. If you get off the phone with a customer, you have in your notes, you know what the follow-up steps are, you can move to the next customer so you can spend more time in person with them. These are just some of the use cases we're thinking about that we feel generative AI can be very good at.
Mr. Karunamurthy. Now, I practiced this for the better part of 5 minutes in my head, and I just did a poor job there. Karunamurthy. In your testimony, you identified some of the work your firm does for financial services clients. Nominally, you described that as applying AI to, quote unquote, harness the power of their proprietary data, end quote. More specifically, what kind of work are you referring to there? Is this an effort to improve these clients' customer chatbots or other applications of generative AI that we should note?
Thank you, Congressman. A lot of the initial use cases we've seen excitement about are areas where you need to synthesize and understand a huge range of data and see how that data is evolving over time. For example, for reviewing legal or compliance documents and identifying red line changes or other changes and the impact those can have, and helping human operators understand what's happening in that data. We also see a range of use cases where these AI models can generate code, and that code can go and discover new insights out of the data automatically, so assisting data analysts in doing their job more efficiently. But we've always seen that this is an assistive technology that helps data analysts, wealth advisors, other job functions do their job better rather than replacing jobs at this moment.
Thank you, Mr. Karunamurthy. With that, I yield back.
Gentleman yields back. I now recognize myself for 5 minutes. Mr. Linda, purchasing a home is probably the most significant investment the vast majority of Americans will ever make. Realtors play a vital role overseeing and facilitating this process, especially for first-time home buyers. Do you believe that humans will continue to retain an important role within the entire transaction, or do you see AI playing a larger role as we move forward?
Thank you for the important question. I shared in my opening remarks that from our research, we surveyed buyers, and they shared with us that over half of them actually cried during the process. That's how emotional and distraught and difficult the process is, and that's why we see the human as the centerpiece of the whole entire transaction. And we are actually trying to use AI to enable the humans to spend more time together, enable the agent to spend more time touring homes in person with the customer, as opposed to, again, doing mundane, repetitive tasks. So we truly believe that the human aspect is a key to real estate transaction, and we see AI as an enabler of humans spending more time together as opposed to less or replacing anyone.
Now, we understand that AI can process vast amounts of data, including property records, sales history, economic indicators, and market trends within the real estate market. Using AI to process and analyze this information can help identify patterns and correlations. Do you believe that this means that AI will make buying a home a reality for more people within the market?
Absolutely. By increasing transparency, as an example, this estimate empowers more people with information by empowering people to find homes on the market more easily through things like natural language. These are some of the strategies that Zillow has been deploying to really enable more people to find home, make more informed decision, and as I mentioned already, spend more time with the agent in person, so they can get the advantage in the market and actually end up with purchasing a home.
So to that end, how is Zillow ensuring that AI-powered tools are developed and deployed responsibly to make searching for, renting, buying, or financing a home more equitable and transparent?
Thank you for the question. We have several levels of things that we do. I will start by really putting fair housing and the existing regulation at the forefront of what we do, and kind of infusing it with what's needed to deploy AI responsibly. And we started doing that by putting publicly our principles and then following them in what we do. We have a cross-functional working group at Zillow that proactively looks at intakes, algorithms early on as the ideas come up. We look at them from the lens of fair housing and responsible AI. We look for inputs that we shouldn't be using. We think about the impact of the customer, define fairness metrics. We go through the audit, and every time a major new update to algorithm happens, we do it again, because every time algorithm changes, algorithm that was fair yesterday might be not fair tomorrow, and so this is a repetitive process. And we also come to all places like this to share our experience, and we continue to work as we go forward.
Mr. Zecca, according to your testimony, an estimated $3.1 trillion in illicit funds flowed through the global financial system in 2023, and last year alone, losses from fraud totaled $485.6 billion globally. How has NASDAQ used machine learning to address illicit activity?
So our Verafin product provides AFC surveillance software for about more than 2,000 institutions, so all the way from credit unions to tier 1 banks. And in that context, what they're trying to do is put together the various pieces to develop cases. And some of the data will be within their own systems. Some, frankly, will be on the internet when you're trying to figure out whether a person's name whether they have a connection with another individual. AI is a game changer in trying to connect those dots, and having the compliance departments, who are stretched with a lot of different responsibilities, have them focus on the most likely cases and avoid the false positives. And so we're seeing a significant increase in efficiency, and I think over time that will even increase.
But as is often the case when new technologies emerge, criminals are also using them to develop new and more sophisticated financial crime strategies. So from that end of it, what is NASDAQ doing to out-innovate the bad actors, if you will?
Well, we're working with our clients on their use cases. I do think your question raises two important points. One is, I think most institutions would say we would like a stronger feedback loop with the government on when we do our suspicious activity reports, which ones are the most useful. And that, while there is feedback, I think that's an area where people would want more. And the second is clarity on the expectations of the regulatory requirements. If you're fighting crime, the level of explainability that you may be able to accomplish, maybe that's less important than trying to stay up with the criminal. So I think that's another piece that regulators will need to weigh in on.
Thank you. I'd like to thank our witnesses for their testimony today and for your patience this morning. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair. I will forward those questions to the witnesses for their response. I ask our witnesses to please respond as promptly as you can. With that, this hearing is adjourned.
It was really nice to meet you. I hope our paths cross again. You're based here, right?
I am based in Washington, D.C.